right now is up by about 0.5 odd percent, hovering around the 24,200 levels. I mean, we were expecting this kind of move considering the way Gift Nifty moved. The Bank Nifty also seeing gains of about 0.7 odd percent above the 57,600 levels now. So both the benchmarks showing strong momentum. The broader end of spectrum is also equally doing well. The mid cap 150 is up by about 0.6 odd percent. The small cap 250 is up by about 0.8 odd percent. Let's also quickly pull up the sectoral heat map to see the sectoral picture and see as to what sectors are in action today. IT continues to be under green, up by about 1.3%. Metals is something that's also shining, up by about 1%, and you also have realty back in the green today. Just the oil and gas and defense are the two names that are under pressure and in the red, but not much of a losing ground there. Let's also quickly pull up the advanced decline ratio and then the BSE 500 to see as to what specific stocks are buzzing. You have a healthy ratio in the favor of the bulls, as you can see on the screen for your advanced decline ratio, and the BSE 500 quickly if we can to see as to what names are buzzing in trade today. You have something like an MMTC, Welspun Living for second day in a row. In fact, Welspun Living, Sri Renuka Sugar, etc. have been doing well, and on the flip side you have PFC, REC, AST, DM, Laopal, etc. that continue to be under pressure. But let's start digging into your stock related questions, and to answer them, of course, today we have with us in the studio Kush Bora, founder of kushbora.com, and we're also joined by Gaurang Shah, Senior Vice President at Geojit Financial Services, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. Kush, before quickly I start taking the questions, your quick take on the indices as well right now.
First of a very good morning, guys, and so good to be sharing the screen with Gaurang. I think it's been a while since we did that, so Gaurang, really excited for that. I think the markets are seeing a bit of a rebound, which was par for the course, 12 sessions of lower high formations. I think the upsides could be capped here, 24,300, 24,500. I know it seems like 300 points away, but then we've seen a sluggish move. So even if it's a short covering move, it's just that I don't see too much of momentum building, but we'll take each day as it comes. So look for levels of 24,300 and 24,500 on the upside. Right now, I would take this as an opportunity to exit my longs. Fresh longs, we'll see, if the trend indeed changes, then you go out and create fresh longs. For now, this is just a rebound.
Okay, all right. So that's the view coming in on the benchmarks. Let's start digging into your queries. The first one that we have is from the IT space, Gaurang. We don't have the name of the specific stock, but your overall outlook on IT, what do you make of it right now, Gaurang, from a fundamental point of view? Any picks that you have in the space?
Sure, Mahima, thank you so much for having me on the show. Good morning to all your viewers, to you and my good friend Kush as well. It's been quite some time since we shared the screen. It's really an honor and a pleasure to share the screen and do the show with you, Kush. So a standard disclosure, Mahima, first of all, that all recommendations that I'll be sharing with you on your show this morning, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, it was not long ago, a lot of people had written an obituary on the IT sector because of what's happening in terms of changes, innovations, new tools, platforms, and the run rate of these innovations is going to go up to a great extent as we go into the future. So even at that point of time, when everybody had written off IT saying that there is nothing left in the sector, we maintained our positive stance. We were convinced that the capability and the capacities of the IT companies will be required despite of the fact that these innovations are coming sooner rather than later. And along with that, Mahima, the first quarter numbers, which was expected to be a absolute drain out quarter for the IT, turned out to be a pleasant surprise because they delivered good set of numbers, in some cases better than what the street estimated. AI contribution, Mahima, has come in at a far higher level for some of the IT companies, and the verbatim given by the management is extremely strong in terms of future outlook. Having said that, I will name two names from small cap, mid cap, and large cap. This is purely from a long-term point of view with 1.5 2 year time horizon, and with the caveat that 10 years back, the kind of returns you used to get in IT, you will not get that kind of return, but you will definitely get return subject to provided you have analyzed your investment ideas and invested in it. So starting from the base of the pyramid, from the bottom, small cap, Science Limited and KPIT Tech. These are the two names in the small cap. In the mid cap universe, we have positive coverage on Coforge. I believe Persistent System also is appearing. I'm not too sure. And in the large cap universe, we have 3-4 names. But to name two of them, it would be TCS and HCL Tech.
Okay, so that's a comprehensive view coming in on the IT space. But let's take in the next question, which is coming in from Ashwini, who's writing us from Chennai, asking about Kalyan Jewelers. She wants to know the short-term target for this one. Kush, I'll straight away come to you. What are the charts indicating? We've seen good gains. We've also seen a fall before that. So what do you make of the charts right now?
Yeah, I think the moves that we saw, in the last month or so, they largely actually rebound trades, if you ask me. Of course, they're backed by volume accumulation, so that's obviously a healthy sign. And the consolidation that you're seeing right now is on the back of very low volumes. So this uptrend could well be intact. My concern is, the volatility in the stock is far too high for my comfort. But, if you prefer it, you prefer it. On the upside, I think 625, that's the first level to watch for as resistance. And once that is taken out, the next one actually comes in significantly higher at about 690. So if you have positions, I wouldn't say exit or anything. You can very well hold and keep your stop losses at about 555 kind of levels. Once 625 is taken out, I think the stock could perhaps zoom again.
Next query is on Anantraj. Sunil Kumar from Vishakhapatnam has bought 100 shares of Anantraj for a price of around 650. He wants to know whether should he hold or exit. Any view on this, Gaurang?
Well, so we remain positive on the sector, Somit. Good morning to you as well. Unfortunately, we don't have any specific coverage on Anantraj, so I won't go into details of buy, sell, and hold. It's a decent performer, and I hope they will improve upon the earnings to deliver, which will reflect upon the stock price as well.
Quick take on the charts, Kush, for Anantraj.
Very positive. Just that the buy price is elevated and the stock's now approaching that. But yes, you should continue to hold. Stop loss at about 590, 600 levels.
Okay. In fact, we've got Mohan, who's waiting by for quite a bit, calling us from Mysore. Mohan, very good morning to you. Thanks so much for waiting by. Go ahead, ask your question.
I have done what 4 shares of Centum Electronics, 2,160. Just want to long-term perspective. Can I add the shares?
Okay, got your question. And you're looking at this from a fundamental point of view? Hi Mohan, can you hear me?
I just bought 4 shares of Centum Electronics. I just want to know whether can I buy this for long-term perspective. For further, I can add the shares for 1 year.
Okay, got it. For a year or so. Kush, I'll come to you on this one. Centum Electronics, are the charts positive enough?
They are. I wouldn't really read too much into the fall that you've seen in the last, 5-7 odd sessions, because the moves prior to that, remain very strong. So on the whole, I think the view on this one is positive. Deepish stop loss close to about 3,000, 3,050. But yes, if you want to add, you can consider adding at these levels also. So remain constructive on Centum Electronics from a medium to a long-term perspective.
Next query is coming in from Navin. It's on Persistent System. He's currently holding around 80 shares, bought at a price of 287. What would you recommend Gaurang here for a long-term investor? Should he add more or continue to hold what he's having?
So I just mentioned about Persistent Systems being one of the coverages that we used to have some time back, but after the numbers, my fundamental team is currently reviewing it. So I mean, like I mentioned earlier, we did have a positive coverage, but currently since it is under review, I won't go into specifics because of compliance issues, buy, sell, and hold. But yeah, we used to cover on the positive side Persistent Systems, and the number delivery is likely to improve as we go forward, and positive overall, as I mentioned, on the IT sector.
Okay, all right. The next one that we have is coming in, and this is on Samvardhana Motherson. Dr. Raja is asking this question. He's got around 276 shares of this company at the levels of 68. Impressive levels that he's gotten into, and wants to know from a long-term perspective whether he can continue to hold this one or sell and book out. Gaurang, what's your view?
Extremely positive. Again, a disclosure, Mahima, we do have a positive coverage. And I have always maintained one thing, and I think we've discussed this earlier also, that if you are positive on the auto sector, which we are extremely positive, there are various names, then you cannot be underweight on auto ancillary, tire manufacturing or battery manufacturing companies, because all these 3 ancillary sectors which are connected very closely to auto will also do well if auto has to do well. So if you're a long, and one more important thing, Mahima, he got in at a very attractive level. I think 68, if I'm not mistaken,
yeah, 68.
The investment level. You're deep in the money. Don't need the money, stay invested.
Right, the next is a caller query coming in from Delhi. Sanjay, you can go ahead and ask your query.
Yeah, morning. My
Good morning.
query is regarding Nav Ventures, Nav Bharat
Okay.
Ventures. I am having 250 shares at the rate of 582 rupees. It's a recent purchase before the results. And now after the results, it has been lagging over there and I'm in losses. Shall I quit over here and book losses and switch over to Niveli Lignite instead of Nava, or shall I stay over with the Nava Industry Limited?
And for long term?
No, till Diwali. I have funds required till Diwali.
Okay. Kush, what would be your view on Nav Bharat?
Yeah, so the stock's actually seen quite a bit of drawdown even after the result. It's actually seen a bit of a correction, but actually, if you see, the stock was actually at 730, 750 odd levels, and has been sliding since then. Now the thing is that at these levels, it's very close to support zones. Positive divergence is emerging, so there could be a rebound trade, and his buy price is not too far in that sense from the current price. So I would suggest if you can give yourself that much of a chance, wait up. And with a stop loss at about 535, continue to hold. There could be a rebound, so you'll at least have an opportunity to exit at or just above your cost.
All right, okay, so that's the view coming in on Nava Limited. But it's time for a rapid fire round. Gaurang and Kush, try to keep your answers as short as possible. The first one is for you, Kush. Between Grow and Info Edge, which one is a better bet for the next 3 to 6 months? Deepak from Chennai says he has 2 lakhs to invest in. What should he do? Should he divide? Should he concentrate on one stock?
Yeah, so if you ask me from a momentum perspective, Info Edge is a better bet. Grow's consolidating, so I would go with Info Edge.
Okay.
The next query is on CSC. It's for you, Gaurang. Naveen Chopra wants to know whether it's a good time to enter CESC.
Well, we used to cover CSC, Sumit, but since our target price was in place, we have not initiated any further coverage, but we are positive on the sector, that is power generation. Sumit, and if I have to give any alternative investment ideas, Tata Power, NTPC, JSW Energy and Torrent Power.
Okay.
We are positive on these things.
Okay, the next one is on Walk Hard. Yadav from Ajmer has invested 500 shares and wants to know the target price for this one in the near term. He's asking this to you, Kush. What's your view on Walk Hard?
You could well continue to hold this one. Place stop losses at about 1650, and on the way up, the stock does have a potential of going to 2050, and once that is taken on 2200 levels as well.
Next query is on Bellrise. It's for you, Kush. Shankar from Bangalore is holding around 500 shares. Wants to know whether should he continue to hold this. He's planning to buy 500 shares. Should he buy them or should he continue to wait?
Yeah, this was the weekly pick, hit the second target and then saw a very sharp fall in the last couple of days, right? And I appreciate this query. This is a good time to buy into Bellrise. Stop loss on this one should be close to 225.
Okay, Sterlite Tech is the other one. Our viewer is bought it at the levels of 621. Long-term view on this one. 2 years view is what he's seeking. Gaurang?
So once again, Sterlite Tech has been a flyer for the last 3 to 6 months, Mahima, and our targets are in place. Again, we have removed the coverage, so I won't go into specifics as far as buy, sell, and all, but we used to cover Sterlite on the positive side.
Okay.
The next query is on Praj Industries. It's for you, Gaurang. Aparna is holding 571 shares, bought at a price of 544. Can he hold this for the next 2 years?
This is for me, Sumit?
Yeah, Gaurang, it's for you.
This is a disaster. I'm sorry to say this. I think Kush will help me in this also. 700 plus kind of levels, and it is almost corrected 50% or more. There was a tailwind positive of the ethanol story, and this is the only company, Praj Industries, which enabled back-end kind of infrastructure. We used to cover, we have dropped the coverage because of underperformance and poor delivery, Sumit, on the numbers front as well. It would be better to look at alternative investment ideas. I'll leave it to Kush to give the rest of the inputs.
Any ideas, Kush?
Disaster is the right word. There's very near-term momentum, so levels of 375 up to 390 you can hold, so there'll be some reduction in loss, but otherwise exit. The first opportunity you get, you should exit.
Okay, all right. The next one is on Crisil. Shiva from Amravati is bought it at the levels of 4250. 3 months is the time horizon that he wants to continue to hold this. Kush, your view on the charts?
You can actually hold Crisil. I will actually look for a breakout above 4600, 4650 thereabouts. But the near-term trend is turning positive. So yes, hold. Place your stop losses near 4300.
Next query is on Wockard. It's for you, Kush. S. Yadav from Ajmer has invested 500 shares with a target price of 2,150. That was given by you, I believe, Kush. What should he do? Should he continue to hold?
Yeah, I think we just discussed this. You can continue to hold Wockard. 1650 thereabouts is your stop loss, and those targets very much in play.
Okay, Inox India is the other one. Sunil Kumar from Bengaluru is holding 2,700 odd shares at the levels of 1,006. Wants to know if he can go ahead and add more at the current levels. Gaurang, any view?
No, we don't cover this one.
Okay, Kush, quick view on the charts.
You can add, it's consolidating, 1800 stop loss.
Okay, alright. So that brings us to the end of this rapid fire round and time to slip into a very, very short break. But on the other side, we'll be taking more queries. So do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha. Ideas across borders. The Nepal Dialogue. 27th August. Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. By now, I think you all know the drill. But let's take the next question. I think Lipika is waiting by and calling us from Bengaluru. Lipika, very good morning to you. Go ahead, ask your question. Hi, Lipika. Can you hear me? Okay, I think we seem to have lost the caller, but I think her query is directed towards Dixon Tech. Not sure if it's a long-term query or a short one, but Kush, any view on the charts for Dixon Tech?
It's shaping up rather well. I mean, it's already had a good run, seen last 3 to 4 weeks of consolidation. It started that up move again. My concern is that, if it doesn't really build momentum from here, it'll face hurdles at about 15,000 odd level. So you can consider a long trade. 13,500 thereabouts is your stop loss. I actually prefer PG Electroplast in this space. And for that one, if you do enter 585, that should be your stop loss.
Okay, and any view fundamentally also, Gaurang?
I would definitely concur with Push as far as the investment idea is concerned. We are positive on this sector, Mahima. There are 3 names that feature. Dixon Technology, by the way, happens to be a very strong player, one of the largest player in terms of the capacity, and the policies of government is auguring extremely well for the sector, whether it is to do with PLI, or I think it was about last week, Mahima, that earlier this week, that the Honorable Minister again rolled out another additional support for the entire EMS sector. From importing from the rest of the world, India would be exporting to the rest of the world as we go into the future. But Dixon Tech happens to be a volatile stock. There are quite sharp moves. So from a long-term point of view, CG happens to be in our coverage as a disclosure, and along with that, we have PG Electroplast and Amber Enterprises. So these are the 3 names on the fundamental on which we are positive.
The next query is coming in from B.S. Rao from Hyderabad. He's holding Natco Pharma and Laurus Pharma. Out of this both, which one should he continue to hold? Which one should he sell? Gaurang, any view?
So we are positive on Natco Pharma from a long-term point of view, Somit, and we believe that along with large-cap pharma companies, mid-cap pharma companies are also likely to perform extremely well, despite of the headwinds in terms of what comes out from the US in terms of tariff. But there is a larger world other than the US for the Indian pharma companies to cater. Domestic market, Somit itself is a huge opportunity. Long-term, stay invested in Natco Pharma.
Okay, the next one that we have is coming on Railtel Corp. Ahmed from Delhi is holding 50 odd shares at the levels of 400 rupees and wants to know whether to buy more now, keep holding, or exit. Kush, on the charts?
Yeah, no, I think you're better off exiting. A major falling trend line resistance, rises being sold into, hasn't really got too much of a trigger. I would suggest it's a better idea to exit right now from Railtel.
Right. The next query is on Samman Capital, and it's for you, Kush. Gauri Shankar wants to know technical levels to add Samman Capital. Anything that you could suggest?
I do have this stock on my radar from a positive lens. It's just that it's not converted into a call because of the kind of fall that it's seen. I will take this consolidation as a positive sign right now. So if you want to enter, you can enter at these levels, right? It's starting to see some accumulation. So your stop losses would be close to about 144, 143 levels. But it's more of a positional bet, momentum starting to build up. Opposed to this, I like LTF a little bit more. A stop loss on this one would be close to 300 or maybe just under. So both positive, slight preference towards LTF.
Okay, all right. The next one that we have is coming in, and this is on Bajaj Housing Finance. Avi is holding, I hope I'm reading this correctly, 90,000 shares at the levels of 91.8 and wants to know as to what could be the target price for this one in a year or so. It's come down to 86, Kush. Because the quantity is very large, what would you recommend Avi to do?
The buy price you said was what, 91?
91.8, yeah.
Fair enough. I think the good thing is that the buy price is not too high because the stock's actually fallen from grace, right? About what, 150 plus odd levels.
Yeah.
Right now, it's starting to see consolidation. Some uptick in momentum indicators from a weekly to a daily standpoint as well. So from a medium-term perspective, also starting to shape up well. So you could continue to hold. This is a good consolidation going on for the last 5-6 months in this one. So continue to hold. Keep your stop losses close to the 80 mark. And you could hold. Momentum building will perhaps take time, but a hold at with a stop loss of 80.
Well, next is a caller query coming in from Pune. Aniket, you can go ahead and ask your query.
Hello to everyone. So I have a query on Shriji Shipping. I have already bought some stocks, 25 stocks at the price of 244.60. So I just wanted to know both fundamental and technical point of view. Can I hold this for long term and add more if possible?
Okay, all right, okay. So that's the query on Shriji Shipping. Kush, any view on the charts on this one? What do you make of? I mean, it's a small company per se, but what are the charts indicating?
I do. In fact, I have been tracking this closely for a while. It's just that the momentum has been so sharp, something like Cupid, right? That's why it didn't turn into a call. But kudos to you, Aniket, for buying this at the right price, holding this through the journey. So absolutely fantastically well done on this one. So right now what you're seeing is just profit booking. I would be inclined to buy more of this, again close to 600 odd levels. But remember, because it's run up so much, there could be perhaps days when you will see sharp drawdowns on this one. So keep your trailing stop losses in place close to the 575 levels and very much continue to hold.
Okay, all right. The next one, I think Murli is calling us from Hyderabad. Murli, a very good morning to you. Go ahead, ask your question.
Yeah, good morning. Good morning to all the panelists. My question is on ITD Cements. Now it is SEM India project. I have 10 shares taken at 562. So it was been doing some lower circuits for a couple of weeks earlier. Now it is consolidating. So should I hold it on for another 2 years?
Okay, got it. Murli, I got your question, and I believe that you want a fundamental answer for this one. Gaurang, any view on this particular counter? What do you make of the earnings as well as fundamentally 2 years is a good time horizon to continue to hold?
2 years is definitely good time horizon, Mahima, but Mr. Murli, you have doubled your investments. Where the stock is trading at close to about 1280. And the levels that you bought, if I'm not mistaken, was 560 to 580 odd levels. Now, the company is very strong. We used to cover it. Our targets are in place. We've dropped the coverage. Currently, we don't have coverage on SEM India or ITD cementation as it was known earlier. Execution of order book will definitely trigger earnings visibility in terms of top line and bottom line, Mahima. And the company seems to have a decent order book. I won't be able to add much since we don't have any further fundamental coverage.
Got it. Okay. So that's the view coming in on. Kush, any quick technical take also, because this has been one of those counters that has done very well as compared to peers as well.
Interestingly, I see themes of the day play out on Ask Profit. Trust me, there are days when people buy and they've been in losses for a while. Today, I think is a day when when the viewers have bought momentum stocks at very low levels, and so happy to say that they've been riding these moves. Shriji is a case in point. So is Chem India. So kudos to you guys. Fantastic job on this one. I still remain very constructive on Chem India. Very good moves, profit booking in the last few sessions. I think you should continue holding on to this 2 years good time frame. I would suggest a stop loss at about 1100, 1050 odd levels. But yeah, after this kind of a consolidation, the stock could gradually start its up move again.
Okay, all right. So that's the view coming on Chem India. The next one is also an interesting one because Niket from Bengaluru says that he's got two counters, ITC and HPL Engineering. He says that both of these are in continuous downtrend and wants to know from a slightly long-term perspective of 2 years, what should he do? Should he continue to hold these or book out? Gaurang, I'll come to you. HPL Engineering and ITC are the two counters that he's talking about. ITC, in fact, did hit the 52. Yeah, go ahead.
I'll keep my comments specific to ITC. This has been a trouble maker for a lot of investors. But patience have been tested and tried, and of course, the kind of numbers that were delivered. I think it is again, stretching itself downwards towards the lows that it has made in the past. However, as a disclosure, we remain positive on ITC. 313 odd is the target. from a long-term point of view purely. Government's focus, and there is a bit, again, there has been a lot of news or noise on the street of other than ITC hotels being hived off and listed as a separate entity. There's a lot of noise on the street for other businesses to be hived off and listed as a separate entity, which may unlock value. Of course, that only time will tell, and I'll leave it to the wisdom and fine sense of management as and when they want to do it. Long term, continue to hold on if you got in at elevated level. If Kush can help me with lower levels which can be averaged, it would be really great.
Right, the next query is coming in from Gujarat. नितिन, अब आपका क्वेरी पूछ सकते हैं.
तो मेरे पास 500 क्वांटिटी है डीसीबी बैंक की जो मैंने 188 पे ली हुई है. तो व्यू तो मेरा शॉर्ट टर्म का है, बट मैं जानना चाहता हूँ कंपनी थोड़ी मुझे रीजनेबल लग रही है, तो मैं इसको लॉन्ग टर्म के लिए भी होल्ड कर सकता हूँ क्या?
ठीक है, ठीक है. Gaurang, do you think Nitin should continue to hold DCB Bank from a long-term perspective?
If you allow me to answer this in Hindi, Somit?
Yeah,
for the
obviously.
Of you. Great, thank you. So, नितिन भाई देखिए, DCB बैंक का एक इतिहास रहा है. काफी लंबे समय का इतिहास ये था कि नतीजों के आधार पर बहुत ही नकारात्मक परिस्थिति उभर करके आई थी, और वो एक बहुत बड़ा कारण था जिसके वजह से ये एक निचले स्तर पर रहा करता था. काफी सालों पहले हमारी कवरेज थी, लेकिन नतीजे खराब होने के कारण और कुछ खराब खबरें आने के कारण हमने हमारी कवरेज निकाल दी है. आपने 188 पे लिया है, मौजूदा स्तर 179 190 के आसपास. नितिन भाई, अगर आपको लंबी अवधि के लिए निवेश करना है तो मैं विकल्प दूंगा. डीसीबी बैंक कवरेज में नहीं, इसलिए विशेष रूप में टिप्पणी नहीं करूंगा. और एक बात है, नतीजों को लेकर के असमंजस परिस्थिति है. कुछ तिमाहियों में बहुत ही अच्छे नतीजे आते हैं और कुछ तिमाही में उतने ही खराब नतीजे आते हैं, तो संतुलन बिल्कुल बिगड़ जाता है. तो अगर विकल्प के रूप में आपको 2 साल के लिए निवेश करना है तो निजी क्षेत्र की 2 बैंक का नाम मैं आपका देता हूं. छोटी बैंक या छोटी से मझौली बैंक में तुलना या गिनती होती है इसकी. फेडरल बैंक और सिटी यूनियन बैंक. अगर आप तुलना भी करें इन दोनों बैंकों की डीसीबी बैंक के साथ, तो मार्केट कैपिटलाइजेशन पर, नतीजों के आधार पर और कामकाज के आधार पर ये दोनों बैंक ज्यादा बेहतर बैंक है डीसीबी बैंक की तुलना में.
Okay, all right. So Kush has something to add, I believe.
I am thankful for Nitin, and I'm thankful to Somit. They gave Gaurang a chance to talk in Hindi. It is music to anyone's ears, who loves Hindi. I was actually hoping and waiting that he gets a chance to speak in Hindi. Gaurang, beautiful. It's so good to hear you speak in Hindi. Of course, your command in English is also spectacular, but to listen to you in Hindi is music to my ears.
I'd agree that. I mean, I'd second that as well, Gaurang. But let's take the next question as well. Genius Power is the counter that Sabita from Hyderabad wants to know about. She's been holding it since the levels of 305 is what she's saying. So it's come up a bit from those levels. It's trading 9% higher today. What should be the short-term target on this one is what she wants to know. Kush, Genius Power, what's the outlook?
Fantastic entry point, 305 or thereabouts, you said, right? So that's a good entry point. Bought it in consolidation, so that's a good entry point. I would suggest a stop loss now of 305, which is your buying price. So that's a trailing stop loss. On the way up, look for targets of about 355. And once that is taken out, 380 also very much on the cards. Momentum starting to build now. Good buy, continue to hold. Trailing stop loss at 305.
The next query is on Electro Steel. Virupaksha is holding around 1,000 shares, bought at a price of 95. Any view on this, Kush?
Not doing much. If you want to give yourself a chance, hold with a stop loss of 68, 69. But I would exit at the rise, towards, let's say, 77 and 80 levels thereabout. Hasn't got too much going for it.
Okay, the next one is, not a counter that we talk about a lot of times. It's on all-time plastics. Nikhil from Bangalore is holding 50-odd shares at the levels of 385. Wants to know whether to hold or exit, and he's asking this query to you, Kush. What would you recommend seeing the charts?
Okay, so very honestly, not a stock that I have tracked very closely. I haven't seen this from the preliminary glance that I have. It's in a serious downturn. I would exit at the current level also.
Okay, all right. The next one, I think we've got a caller waiting by, if I'm not wrong. Karishma is, I think, calling us from Mumbai. A very good morning to you. I hope I've pronounced your name correctly. Go ahead, ask your question.
Yeah, Mahima. Very good morning to all of you.
Yeah.
Actually, this query is to Kushbura sir. So what is the right stock to pick in among the Shriram Finance, Bajaj Finance, and PNB Housing, both short term and long term.
Okay, got your question. Kush, between the three, where is the chart looking more attractive? Which one would your pick be?
First, what a lovely name, and I like the spelling. It could be charisma and karishma both,
Yeah.
right? So, great, and thank you for directing the query towards me. Look, from a long-term perspective, I like Bajaj Finance. It had its share of up and downs, and it's starting to move higher. But you'll have to be patient with that. So you can buy Bajaj Housing Finance. Stop loss is near 1025, odd levels. But if you want to go for momentum, and if you heard me in the morning show, PNB Housing is the stock that you should look for. We gave a buy call on this for immediate targets of 1200, 1245 thereabouts. So from a momentum perspective, I would suggest a buy call on PNB Housing Finance. Stop loss at about 1125, 1130 levels. And from a positional standpoint, Bajaj Finance.
Okay, all right. Next one is also in the BFSI space, because Sandeep wants to know about Axis Bank and wants to know if this can go to the levels of 1310 to 1320 in the next 15 days. So, very short-term targets that he's looking at, Kush, is that possible on the charts? It's trading at around 1250 right now.
देखो possible तो कुछ भी है. Probable अगर पूछते तो मैं कहता शायद थोड़ा सा unlikely है. However, from the large cap space, this stock is actually now starting to show some positive traction. So if you ask me whether you should buy, sell or hold right now, I would suggest yes, you can hold. There is a double bottom formation in place at about 1210, so that should be your stop loss. If momentum picks up, if the macros improve, then there is every possibility that this can go to 1310. If not, at least the trend is starting to turn positive for Axis Bank, and I'll take heart from that fact. So hold, stop loss at 1210.
Right, the next query is coming in on MRPL. It's from Sushila Billeri. She is holding 5,227 shares, border price of 179. Any short-term targets on this, Kush?
Okay, so the pack is doing well. The stock has also done well, but it's also had its share of volatility. I would suggest at or close to your buy price. It's actually pretty much there. But maybe if you have some profits, 180 to 185 levels, I think you should exit this one. Chennai Petro is, by the way, much better placed. So for MRPL, you can hold, but I would suggest an early exit, in a limited profit also. And for stop losses, 167. That's your level where you should keep your stop loss in MRPL.
Okay, all right. The next one that we have is coming in on, this is from Sanskar Agrawal, who's writing us from Jabalpur, asking about SBI funds, and he wants to know if this is the right time to enter. Would you recommend that, Gaurang?
Sorry, which is the stock?
SBI funds. Yes.
This is a difficult one. We are positive on the entire Indian capital market related theme, Mahima, from a long-term point of view. We did come out with a subscribe note for the IPO for this particular company. And if you are in for the long term, you can definitely have a look at it and possibly invest in a phased out manner, Mahima. Don't go and put all your money at one time. And if I'm not mistaken, the floor for SBI funds was 574. Correct me if I'm wrong. It is below the floor price. Currently, it is at a discount. From a 2-year plus kind of time horizon, I will keep the IP note as the base of my recommendation and advise you to buy in a phased out manner for a long term point of view.
Yes, you are right, Gaurang. It was, the upper end was at 574 and it's trading below that. So, spot on that one. But so that's the view coming in on SBI funds, of course. The next one that we have is on IDFC First Bank. Kalpesh is holding 1,000 odd shares at the levels of 85 rupees and wants to know as to what should be the next course of action for him on this one. Kush, what would you recommend on the charts?
Yeah, so this is not my preferred pick in the space. Let me start with that. But the near-term moves on this one have been very encouraging. There'll be a breakout above the 86, 87 mark where it's trading currently. So because there is a near-term momentum and the buy price is not too far off, I would suggest you can continue to hold this. Place your stop loss at 82 levels. Okay,
all right. So that's the take coming in on IDFC First Bank. But time for a rapid fire round. Try to keep your answers as short as possible. The first one is on Amara Raja Battery. Hari from Bengaluru has bought it at the levels of 892. 300 shares is what he's holding. Wants to know, because it's correcting again, should he continue to hold this one or not? Kush?
You can continue to hold. Stop loss at 915.
The next query is on GE Shipping. It's for you, Gaurang. Ram from Hyderabad is holding 300 shares, bought at a price of 1,540. Should he continue to hold, sell or book losses?
sector is good. Long-term prospect is extremely positive on fallback of what is happening in the Middle East. Unfortunately, no coverage, so no specific comments.
Okay. CMS Infosystems is the other one. Sampath Balaji from Chennai is holding 200 shares at the levels of 235. Long-term view on this one, Gaura?
I'm sorry, which was the stock?
CMS Infosystems.
We don't cover this, sorry.
Kush, any view on the charts?
Yeah, I'd suggest exit.
Next query is on E2E Networks. It's for you, Kush. Mahalakshmi from Hyderabad is holding 325 shares, bought at a price of 425. Should she continue to hold this counter or exit?
Great buy price. Continue to hold. Stop loss at about 595, 590 levels.
Okay. KC International is the other one. Rituraj from Bengaluru wants a 6 months view on this one. He's holding 130 shares, bought at the levels of 556. Kush?
A difficult one, but continue to hold. Stop loss at 5.9. Exit at rebounds.
The next query is on Supreme Industries. It's for you, Gaurang. Lalitha from Bangalore is holding 10 shares, bought at a price of 3,565. Currently sitting on a profit. Should she book profits or continue to hold?
Continue to hold. Target in excess of 4,000 plus from a long-term point of view.
Okay, the next one is on PFC. Our viewer Subrata Mukherjee has bought it from a long-term perspective at 390. Continue to hold, maybe average at the current levels, Gaurang?
Well, so there is a merger that is likely to happen, as we know, Mahima, PFC, RSC. And according to the views on the street, the merged entity will have a very strong balance sheet. No specific comments since we don't have coverage on PFC.
The next query is on Regal Resources. It's for you, Kush. Nikat from Bangalore is holding 100 shares, bought at a price of 137. Should she hold or sell?
Hold, momentum building up. Stop loss 89.
Okay, the next one's on BSC. Siva from Amravati is bought 300 shares at the levels of 3,500. 3 months view on this one, Kush?
There is a falling channel resistance, but because there is a rebound as well, I would suggest a hold on this one. Stop loss 3,200.
Next query is on Intellect Design Arena. Naman from Indore is holding, and it's for you, Gaurang. Naman from Indore is holding 757 shares, 709 shares, bought at a price of 757. Should he continue to hold or exit?
Well, a decent company on the earnings also. Outlook is very strong from a long-term point of view, but unfortunately don't have coverage from it, so no specifics. Buy, sell, hold over here.
Okay, the next one is on Ujjivan Small Finance Bank. Shashidhar Reddy wants to know if this is the right entry price to enter into this counter. Kush?
I would suggest wait up on the entry. Above 73, 73.5, there'll be a breakout, and then right now it's consolidating.
The next query is on BHEL. It's for you, Gaurang. Guru from Hyderabad is currently holding 200 shares, bought at a price of 249. Should he continue to hold or sell?
BHEL continue to hold from a long-term point of view. Sumit, the earnings were a great turnaround after a very long period of time.
Okay,
and the commentary and the verbatim is that the execution will continue. So hold for long.
Okay. The next one is from Kaushik, who's writing us from Vadodara, asking about Reliance. It's got 50 shares at the levels of 1392. Good hold, Gaurang?
Definitely a good hold. I think with the kind of lineup that the company has, we have a positive coverage. Hold for long term.
The next query is on Solar Industries. It's for you, Kush. Murli from Hyderabad is holding a couple of shares, bought at a price of 4,800. Should he continue to hold or exit?
Wow, no. You can continue to hold. Stop loss slightly deepish, close to 17,500.
Okay, all right. So that is the end of this rapid fire round as well. We try to take as many questions as possible. Kush and Gaurang, thank you so much, as always, for taking out the time and helping us answer all those queries. With that, viewers, completely out of time on this edition of Ask Profit, but do stay tuned in. KYC is coming up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation, NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you interesting companies, newly listed companies, new themes, and what's the alpha coming in Dalal Street. I'm getting you all these interesting companies exclusively in KYC. But today I've got a very interesting company for you. But before that, try to understand what hint I'm going to be giving. It's India's largest non-ferrous metal recycler. Also, it's backed by Sunil Singhania promoted entity Abacus. Another hint I would like to give you, it was recently listed. It was listed on June 10th, 2026. Just been 2.5 to 3 months. And 80% recycling comes just from aluminium segment. Try to guess the company, and there's a very important saying, one man's, you could say, waste is another man's treasure. And that's why this is an interesting company which we have come in, and that is the CMR Green Tech. Now we'll try to understand the angle of why are we calling this company. Of course, this is the company coming first time in KYC after its listing. So we'll try to understand what's the business model like for an aluminium recycler and what's the moat here. Is there any moat here, or anybody can enter this industry? We'll try to understand that from perspective of the company, the current pricing trends and hedging. How do they do that for aluminium? Because that's a raw material also coming in for them. What benefits come especially from the ICE to EV transition which is happening? What kind of elements are required, and where does the company actually put itself? The outlook for the JVs, they're having a lot of JVs with Japanese people. That means their quality levels are on the higher side. They're not a run-of-the-mill company. Also, another question I'll try to understand is the margin guidance. Should we look at margin guidance or should we look at EBITDA per kg? We try to judge how to value this company, and that is why this ratio is more important. Also, we'll try to understand the outlook for the non-aluminium business. Right now, it's around 20%. How do they grow it? Is there any expansion at play? And speaking of that, we'll understand where the greenfield numbers are looking and how the brownfield expansion is actually shaping up. Interesting questions, interesting company. But let's try to understand what does this company actually do. And this, I think, for the first time, we are getting, this company, especially in the aluminium segment. We had other companies also in KYC, but I think this is the second or third company in KYC in this theme. Now, this is India's largest non-ferrous metal recycler and largely the market leader in secondary aluminium. There is a primary market as well as secondary aluminium market. They have 13 strategically located facilities where they gather most of the waste. And that waste, of course, gets processed. Installed capacity is roughly 6 lakh tons annually, and they're targeting 7 lakh at the end of FY27. Backed by Abacus Group by Sunil Singhania, promoted at entity. So, of course, Street is excited about this counter. Also, let's talk about the global scrap sourcing. So, there are a lot of yards. From there, they do a scrap sourcing, and from there, they process, and then they give out the final products. 3 strategic JVs with large Japanese players. And when you have a JV with a Japanese players, that means the quality standards are top-notch of global standards. 74% scrap comes from international markets. You can see so such a huge market India has become for this recycling, and that's why the up move is coming in. This is a very interesting photo I would like to point out. When you have this large aluminium place and a lot of processing happens, a lot of waste happens. So this is how the waste actually looks, and this waste looks for aluminium, copper and most of the metals. Also, they're doing a 200 crore FY27 capex as well. Going ahead, there are other couple of plans in the expansion, the greenfield expansion projects which are happening at the 2 places, and also brownfield expansion is undertaken, especially in Tirupati and other locations as well. So when you suppress the overall, you could say, the waste, this is how it looks in small billets of forms. So these photos are very much important for your understanding. The installed recycling capacity, they're targeting 7 lakh tons per annum by end of FY27. But let's move on. Apart from the expansion plans, the revenue breakup. Right now, it's still an aluminium focused player. 19% comes from other segments like zinc, steel. Remember, aluminium as a waste keeps on coming. There's a regular movement of this waste is there. And because of that, we are seeing a major exposure coming in from aluminium because we use it on an everyday life. Also, let's move on and understand more details about who are the key customers. We have Hindalco, Jindal Stainless, Maruti Suzuki. I'll explain you that they have exposure to the tier 1 auto OEM players, and that is why when you speak about it, we have Hyundai also, as well as Gabriel India and Endurance Tech. These are the companies which are the key customer profiles for the company. Also, the recycling story of India, and that is where we feel like one man's waste is another man's treasure. The minimum recycling content, that's expected to go up by a lot of products in India itself. There's of course government push also, the PLI scheme. Look at that amount, that's almost 2 lakh crore coming in. And also we try to understand the aluminium consumption that is expected to double up over the next decade. So the company will be in the middle of important timeline, and the recycling market, that's also expected to go up by almost 11% CAGR by FY30. There is a shortage of resources, and that's why recycling comes in. What make work for the company? Strong operational numbers coming in, and of course the Q1 numbers are also strong. The valuations are cheaper than the peers. I'm going to get you those list of those companies and see how the valuations are stacking up. D-Street's chosen theme right now, there is a lot of flavor, and anything in recycling with a good moat is getting a premium value. Government incentives is also pushing this up. And one more point I would like to say is the JVs with Japanese companies, tier 1 OEM relations. So this matters a lot, especially when you have a global sourcing partners coming from abroad. But what may not work for the company? At KYC, we always give you the balanced view and opinions. The lack of analyst coverage is there, it's okay. It's recently listed, so we're going to give it more time. Higher dependence might be there from global suppliers on the overall risk of outsourcing or getting the raw material for the company. Volatility in aluminium pricing. We need to understand how does the company hedge. We'll try to get that from the management, and the environmental risk also comes in case some issues happen. Also, the working capital and inventory risk that comes in this model, and that impacts the cash flows, and I'm going to show you those numbers also. So this is the entire picture for CMR Green, what's good, what's not. But let's move on and understand the KYC ratings where we judge this company. Of course, I have tweaked it a bit because it's fair to judge the company on their operational parameters rather than return ratios right now. And largely income statement, balance sheet, cash flow remains the same. But take things with a pinch of salt. It's hardly been 2.5-3 months of history when it comes to the shareholding and street cred, where we try to understand how the company has performed, what's the shareholding looking like, and of course the valuation. This is very much important because I'm going to introduce you some new company names also, which you can track in this recycling theme and understand how the industry valuation dynamics is working. And lastly is the outlook. Is it the good story or is there some hiccups in the short term? These are the key questions to be asked. But first one, let's understand income statement, how things are panning out. Largely the margins isn't so much in this kind of a business model because this is how it is. Largely the top line and the EBITDA number, that's something you should be watching out for. And the CAGR numbers have been strong. The company came out with its Q1 numbers also. That also is showing strength. But a good momentum is coming as company moves on to more value-added products, and maybe from the commoditized space of aluminium, maybe the non-commoditized space also comes in. There are other business products also. We'll try to understand that, but as of now, the margin trajectory is also very strong. Q1 numbers were also good, and that's what I have actually got this year. So income statement is strong, positive, but balance sheet largely nothing much happening here. Actually, the borrowings have come off. Remember, the company came out with its IPO, so a little bit of debt reduction is there. So we'll try to understand more when is the further debt reduction plans coming in. But net, it's a neutral rating right now for the balance sheet. Nothing much to look at here. But the concern for me is on the inventory level. At times the working capital gets stretched, and that concern comes in the cash flow segment. Look at this amount. This is the way the concern starts coming in. Is it an accounting adjustment? Is it an inventory adjustment? We'll try to understand when we understand the business model. But as of now, a little bit of concern comes in the cash flow segment, and that is why I have given this a thumbs down. But on the other hand, the operational parameters, have a look at that. 3 important operational parameters I'm going to judge the company in. EBITDA per kg, this is one of the most important thing to check the profitability of this industry. There is fixed asset turnover. It's nothing but how much times the company starts doing sales as compared to the machines or the fixed assets which they put, and the sales volume, which is of course by definition what it's there, and that is where we're seeing a good momentum happening. That's rising up 9x to 11x. EBITDA per kg has gone up to 461. Is it because of the rise of the aluminium prices, or is there something more to it? We'll try to understand that. And the sales volume has a significant growth. FY24 to 25 numbers were decent, but a good up move coming in FY26. So this is a structural change, and as of now I'm going to give this a strong thumbs up as well when it comes to the operational parameters. Apart from this, let's look at the shareholding. Largely we just have for 1 quarter, so nothing much to judge here. Still, institutions are having 8% stake in the company, of course backed by Ace Investor, also from Abacus Group, Sunil Singhania. So let's keep this a neutral rating when it comes to the shareholding. But let's understand how much returns have come in and take things with a pinch of salt, and we are going to keep a neutral rating here. There was a good listing pop from IPO price. The stock is still 11%, but a little bit of sell-off has happened. From the listing, the stock is down 23%, and of course there would be overhang of lock-in expiry as well. But does that make it cheap? And yes, it does. Interesting names I've got: Gravita India, we have got Jain Resource Cycling, and even Pondy Oxide. This is the nearest competitors we can have in the industry for CMR Green, and most of them, their valuations are on the higher side, ranging between 29 to 36 times. But look at the valuations for the company right now. It is quite attractive, and of course this is a new industry. Dalal Seat is understanding it, but a lot of interest, so premium is added to it. So we try to understand whether this premium sustains or not for the industry, but as of now there's a discount happening, so I'm going to give this a strong thumbs up when it comes to the valuations. Outlook, mix shift is coming towards the billets, sheet ingots and UBC recycling. These are the high margin segments, value addition as you call it, and also the company has developed a certain kind of a moat. Technological upgrades is happening, and we'll try to understand what are these and by when this can benefit these companies. Remember, there's a JV with the Japanese companies. That angle always keep in your head, that a strong IP gets transferred. Increasing domestic scrap procurement, this becomes cheaper also, and India is also producing a lot of waste in the aluminium segment and even other segments as well. But remember, the elevated aluminium prices augur well in this short term. That's what currently is benefiting the company as well. So outlook overall, it is a strong thumbs up. But let's do a revision of sorts of how this business model works, how the company works, what are the KYC ratings we are going to give for CMR Green. Income statement has been pretty strong, but my concerns are on the working capital and the cash flows. That's why I have given this a thumbs down. Operationally, they have done well across most of the parameters. Let's give it more time when we judge shareholding in StreetCat, but valuations, it is the cheapest amongst the recyclers, and the outlook is also very strong when it in the long term. So overall, KYC rating is 5.5 out of 8 we have given for CMR Green. But we'll try to understand more. A lot of questions, queries are there, and the company is coming for the first time at NDTV Profits KYC. So CMR Green Tech's management will be there. Raghav Agrawal, the executive director of the company, will be joining us. He is almost having a decade of experience in aluminum alloys and the recycling industries, and the business head is CMR NL Eco Tirupati, also the associate member at ICI as well. So it'll be pretty interesting to have a chat with our guest, and we'll just take a short break and then we'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop.
Hello and welcome back to Know Your Company. We are joined in by Raghav Agrawal, Executive Director at CMR Green Technology. Good afternoon, Raghav. Always a pleasure to have you with us at NDTV Profit. And this is the first time your company is making a debut at KYC of NDTV Profit. I wanted to understand, Raghav, what's the exact business model? You are an aluminium recycler, but there is a moat to it. There is some barrier to the entry as per my analysis. Just wanted to understand what's your actual business and what's the moat?
Right. So, thank you for having me. Happy to be here. We are essentially a non-ferrous metal recycling company, the largest company in the country for installed capacity, and we are also amongst the largest in the world. As part of the non-ferrous recycling process, what we do is that we first segregate, we buy mixed scrap, we first segregate the aluminium and the other metals being copper, zinc, brass, lead, magnesium, everything. And then we melt the aluminium and we sell it to the auto industry primarily. The mode that you talk about is our liquid metal supplies, where we save us solidification process for ourselves and the remelting process for our customers. And we are online with our customers at all time. We're supplying them molten metal directly from our plant to their plant, which kind of brings in a strong lock-in between our supplies and the customer's demand, and keeps us very tightly intertwined with each other. So that is what has helped us to grow. That is what has helped us to decommoditize our business, and has kept us at a CAGR of about 23% since inception.
But I'm seeing the margins are also getting upped over here. But there is a current pricing trends also. There's so much volatility happening in the prices across the metal segment. How do you hedge this? How does things work? If you could just explain us like a business cycle.
Right. So we have a 90 to 100 day cycle. We price in our inventory today because we buy today. And then that material, since it is mostly imported, it comes in on, let's say, day 90 to day 100. What we typically get from our customer is a cost pass-through. So our customer typically gives us the previous month average in terms of our pricing. So part of the price risk exposure is taken care of by our customers, and the remaining is what we hedge. We hedge the prices on the LME. We use the primary aluminium contract because there is which is there for aluminium alloy is very illiquid, so we hedge ourselves with the primary aluminium contract on the aluminium.
Raghav, just a little bit more on the cash flows and the inventory segment. On prima facie, it looks like there is a good risk involved in the cash flows as well, which hits your working capital ratios also. Wanted to understand how does this work in your industry, and what are you doing to mitigate that?
So if you look at our inventory levels, then in terms of number of days and in terms of volumes, it has been pretty okay. In terms of number of days, our inventory has been more or less the same. It's been about 40 to 45 days of inventory that we carry in our books. So that has remained constant. But the reason for the negative cash flow is the rise of prices. So typically in the the working capital requirement increases, and which since we earn relatively constant EBITDA fixed price on an EBITDA per kg level, which is why you see that the ROE declines because of the increased working capital requirement.
That's a very interesting way of putting it, Raghav. I'm unconvinced also the way you explained, and I think maybe Dalal Street will take time a little bit to understand your model also, but very nicely we have put in KYC, and that's what we are known for. But the capacity expansion plans and the progress, how things are happening. I know there is a brownfield at play, there is a greenfield at play, and you're also heading the Tirupur segment as well. So just give us the flavor of how things are panning out.
Right. So first on the Tirupati side, so Tirupati has been a slight diversification for us. Historically, our company has been a cast alloy recycling company. Now, with the expansion in Tirupati, we've entered into wrought aluminium recycling, which which increases or doubles up our serviceable market for recycled aluminium. The main demand for the Tirupati plant basically comes in from the building and construction industry and also the solar industry, both of which have strong tailwinds for growth. So the Tirupati expansion, we are very excited about it, about that business that we are getting into. And similarly, we've also put up a plant for UBC recycling in Odisha, where we scrap and then we give back again liquid metal to a big primary producer of the country. On the capex front, so this year we expect to spend about 200 crores of capex, about 100 odd of which is going to go into greenfield projects. We're putting up two new facilities, one in one in Shoolagiri in Tamil Nadu and the other in Bawal. So these two plants are expected to come up to production by the end of this financial year. And apart from that, we're also expanding. We're doing brownfield expansions in our existing plants because the automotive sector is growing fast. And what is also happening is that with the electric vehicles, the aluminum intensity in vehicles is increasing. We hear that the requirement of aluminum in electric vehicles is 3 times that the ICE vehicle. So we are experiencing good demand increase because of which we're taking up expansions both greenfield and brownfield.
Right, of course, auto demand and that ICE to EV transition is happening, but there's a lot of JVs also involved, especially with the Japanese players. And when you have that, the quality standards has to be world class. So we wanted to understand, might that be an edge against the peers? And if yes, what's happening with these JVs with the Japanese folks?
So we've had two joint ventures in the cast aluminum recycling space since 2012. These JVs have been very beneficial for us. They've brought in technology. We learned the concept of over-the-road transfer of liquid metal from these Japanese joint ventures. And also with the Japanese, we got strong customer lock-ins with the Japanese customers. So these both of these joint ventures have been in existence since 2012 and are now running with 3 plants each. And on the wrought alloy recycling also, we have a plant now with the Tirupati plant has a joint venture partner in Nippon Light Metal. Nippon Light Metal is a major downstream aluminum company in Japan, and they have a big demand for recycled aluminum. So 20% of our supplies from the Tirupati plant are also being exported to Japan as part of the JV agreement. And one more thing that I would want to highlight is that we have these 3 JVs, but we don't pay any royalties or technical fees to any of them.
That's a very important point, that you don't pay royalties. That's always a question when we have people from Japan working with Indian companies. But what's the target for the EBITDA per kg? Because I think that's the best parameter to track your company's profit, rather than the usual ones. You mentioned that in the con calls. I'm just following that. What targets we are expecting? Can we hit that 500, 600, 700 mark in the next couple of years?
Right. So one thing that I was looking at what you were showing before I joined in. So I think the figure that you were showing there was the overall absolute EBITDA value. The EBITDA per kg in the last quarter for us was 12.5 rupees a kg. And we've given a guidance to maintain our EBITDA per kg at about 12 rupees a kg for this financial year. Though we do hope to increase it, but at the moment the guidance stands at 12 for the EBITDA per kg.
What is this green billets? Because I just saw your profile and there was an interesting name, green billets. Even though it might be small, but I'm sure you're heading this. So you can give us a flavor of it. What is it?
So green billet is basically a low carbon billet. Typically, if a primary producer makes a billet that has a carbon impact of 14 to 16 tons per ton of production, whereas a green billet, one that CMR NLM Eco makes, has a carbon footprint of 1.5 tons per ton. So there is a drastic reduction in the carbon emission that we are able to achieve by using 98% plus post-consumer scrap in the billet that we are making, while maintaining the same quality standards at par with the primary billet. So that is where the green comes in.
Raghav, just a last short question, because so much of that is happening and I travel across the country visiting recycling companies and precision manufacturing companies who make a lot of these waste products. There is a conversation of carbon credits, which is literally a very nascent stage in India. I'm sure you must be having tons of it. Will that be useful globally when you expand?
So yes, we do. So we generate carbon credits on our liquid metal supplies. 50% of our aluminum sales are in the form of liquid metal, which is where we get these carbon credits. And carbon credits, we have accumulated about 272,000 carbon credits at the moment. And with every passing year, we are generating more on the liquid metal supplies that we have. So at the moment, the market for carbon credits has, like you said, has not matured in the country. I think it is still finding its feet. But when it does, I think we would have a big chunk of carbon credits available with us.
Yes, that's the point at which I wanted to make sure that we highlight that as well. It's always good to have a chat with a second generation entrepreneur. And Raghav, it's a pleasure with you having a chat on your company and the industry as a whole. Dalal Street is definitely giving premium to it. Thank you very much.
Thank you.
So that's the management of CMR Green. Interesting company, recently listed, and a little bit of concerns on cash flows are definitely there. But overall, Dalal Street has given strong tailwinds for this entire recycling sector. Interesting story, right? So for more stories like this, stay tuned to KYC and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Benchmarks extend gains with Nifty near 24,200 level. Sensex gains more than 500 points. Most sectors trade in the green today. Real estate and IT lead the gains. Crude prices hold gains supported by the heightened uncertainty in the Middle East as the US and Iran remain at an impasse. Now the two sides are also embroiled in a confrontation over the Strait of Hormuz. KF Fintech a buzz on expansion with gold loans, targeting 200 to 300 branches by March 2027. Glenmark Pharma gains after the US FDA approved its fluticasone, propionate and nasal spray. Meanwhile, Swiggy shares rally after Jefferies retained its buy call with its move towards IOCC status, expected to offer greater flexibility for the company. Sugar stocks remained firm despite the government's fresh revision in stock holding limits aimed at cooling the soaring prices. Sri Renuka Sugars, Dalmia Bharat, Balrampur Chini Mills, EID Parry and Triveni Engineering also buying interest in early trade. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar and let's begin the show with an eye on the markets at noon today. And yes, it is a sustained kind of momentum that Nifty 50 is really seeing, and the psychological level of 24,200 level is well conquered, and Nifty 50 also looks comfortable at this particular point. Also take a look at Bank Nifty. That has been the biggest dragger or biggest gainer on any day when there are pressure points because of external factors on the overall market for India. And therefore, Bank Nifty is really taking the lead with outperformance to the key indices, and that's adding to the momentum when it comes to the key indices. Also looking at the several other contributors, apart from HDFC Bank, which is the top gainer, adding over 20 points to Nifty 50. It's also Bharti Airtel, Larsen & Toubro, Eternal. So it's a broad-based recovery and a broad-based gain that the market is really viewing at this particular point. On the downside, hardly anything to mention. Maybe an Hindalco or Asian Paints, hardly eroding 1 or 2 points, so it's negligible. Also, the picture is clearer when we take a look at the sectoral play, and almost all the sectors are in the green. So I've got the color right today when it comes to the market movement. Take a look at that pretty picture with green on the screen, and real estate, IT, financial services, these are the ones which are really gaining in trade. On the downside, with a slight bit of red tinge, is only the defense sector. So that's a snapshot of the overall market. Siddharth Vora, the head at Quant Investment Strategies and fund manager at PL Asset, joins in now with more perspective on the market. Siddharth, always a pleasure to get chatting with you. It's a good day of trade after quite a bit of uncertainty as well as pressure points that the market has been dealing with. What do you think is really impacting, and are these kind of sustained movement or buying interest that is seen, is that sustainable?
So I think today, just the move today, I think I can attribute it to a bit to cooling bond yields in the US. Overall FII sentiment towards India, last 2 months, if you look at the numbers, they've been net buyers. So I think after 2 years of aggressive selling, just cooling off on the selling itself is a big trigger, and being moderate buyers is definitely a good tailwind for Indian markets. It provides some sort of cushion, and I think last couple of 5 days almost, Indian markets have been under a lot of pressure. So we could see some short covering as well. And anytime you see any stability in crude, stability in rupee and US bond yields, Indian markets react quite positively. And I think yesterday, the AI trade also unwound in US and a couple of other markets. So I think every time the AI trade falls globally, India does okay domestically. So I think it's a mix of all these factors, coming into play for India today.
That's right, and you very well summarized it, Siddharth. In fact, the AI plays extremely critical because of the FII inflows as well. That factor which has a huge amount of sentiment impact on the Indian market. And of course, the reversal in that trend gives us the benefit, considering we are stacking lower in the AI trend and therefore the investments from FII. Now, Siddharth, looking at this particular trend and how IT sector also gains immediately as soon as the AI trend reversal really takes place in the US. How do you play the IT services sector, the top 5-6 companies who are like really heavyweights when it comes to the IT services, trying to pivot into AI? How much of the interest will you show in that at these levels, and what is your view on the sector?
So currently we don't own any IT in the portfolio.
Right.
We run account models, and they consider a lot of parameters like quality, growth, value, momentum. risk. So from a quant perspective, it's not a quant sector as such, but fundamentally, the way to look at IT, it's a high quality sector. It's a high quality sector with trading at multi-decade valuations. And when this opportunity is arising, one needs to understand that the damage in the sector is not really permanent and the recovery in earnings growth is not priced in. So there is that little gap in what the market is perceiving and what is actually going to play out. And I think that gap is the trade in IT. If you look at the AI order books also for some of the top 5 IT companies, I think they are making some progress in terms of AI order books. The headcount is also reducing, which means efficiency gains are also likely to play out through a cycle. And the growth is actually not as bad as the street is perceiving, and therefore the valuation is overdone on the downside. So I think if you have a 2 to 3 year view, expect and can tolerate some volatility. It's a great contrarian sector and it can do quite well because it's oversold and it's under-owned now. And I think it can be a decent bet in the portfolio from a resilience point of view over a 3 year cycle.
All right, so that too is an important takeaway coming in, Siddharth. And of course, the AI thrust and pivot left aside, the trading play for 2 to 3 years, also with the benefit of rupee depreciation for their bread and butter business can be a good play. But when we look at the sugar sector, of course, lots of news developments, and that has had a sweet impact on that sector as well, with gains on 2 days that we have seen. How would you play the sector at the present valuation from medium to long-term perspective from here on?
So actually, sugar has been quite a big holding in all of our quantamental strategies. So quantamental is basically where quant models are used as a filter or screener. And then there is a fundamental overlay by the fund manager. So in those funds, sugar has been a big allocation, 15-80% of those portfolios are allocated to sugar since the last 2-3 months. So I think that trade has played off really well in some of our strategies. We run 5-6 strategies, and in 3 of them, sugar stocks have been allocated to quite aggressively. So I think that trade has played off quite well. We wouldn't look to add at these levels now, but I think we're holding and running the positions.
All right, so you are sitting with gaining position because of the sweet developments in the sugar sector, Siddharth. But you spoke about 5-6 strategies. Give us a sense on strategically, which are the sectors that you're most buoyant on and which could be at the current valuation still a good buy for medium to long term?
So, in our core flagship flexi-cap fund, we are overweight real estate, auto, financials, and industrials. These are the major overweights. Some of the other sectors, have very stock-specific positions. So, I think 80% of the portfolio would be across auto, real estate, financials, and industrials. 20% would be spread across a couple of other sectors and names. So, right now, we're quite bullish on these. In our flexi-cap fund, in our small and micro-cap fund, sugar has been a big overweight. Metals and minerals are again an overweight. We were running a large overweight. We reduced it. Now we're building that overweight once again. And that is a little more tuned towards cyclicals, commodities, and higher beta names right now, the small and micro-cap fund. And I think these are some of the sectors we're finding quite interesting at this point of time.
Right. Siddharth, a good summation of the sectors and how you're playing them. I didn't see a mention of green energy or any new themes of the sectors of the future, which you are looking at keenly at this point. Any sector not much discovered on your anvil then?
So I think power is still a sector that we hold across all of our portfolios, but maybe 5-6%, 5-8% sort of allocations. But it might not necessarily be green energy. It could just be traditional power also, or power ancillaries, beneficiaries of the power capex cycle that we're going to see in India and in the world with the AI trade and otherwise, private capex as well. So I think we're playing power differently, not necessarily only through green energy as a theme.
Yes.
And I think our quantum strategies are a little more value oriented at this point of time, and therefore chasing extremely high multiple themes or extremely high growth or hot themes might not be the flavor in the portfolios right now.
All right. So, Siddharth, well mentioned there on the power sector. In fact, the opinion that I also get is that since we need so much of our domestic energy and we already have a lot of fossil fuel based and other forms of energy already there with a life span of 25 years. So that is also catching up the momentum and not just the green play. So you're not the first one highlighting on this and looking at the overall basket, but always a pleasure to get your strategies as well as insights on the market. Thank you so much for joining us on NDTV Profit. All right, so that was about the equities markets. Also critical at this particular point is the crude oil prices, which has been having the single largest impact on the Indian economy as well as the markets, and also the rupee movement, which has also been impacting several sectors as well as the market sentiment. Indranil Pan, who is the chief economist at Yes Bank, joins in now for a detailed analysis on what's really happening. Indranil, always a pleasure to welcome you on NDTV Profit. There are many points to get chatting about. First, I wanted to gauge your understanding on the RBI's move as is expected later in this particular year, given a combination of various factors: El Nino impact, maybe inflation, that driving inflation, combined with also crude oil prices, which have been at elevated levels because ultimately the war is not as short term as we thought it would be. And all the measures on rupee depreciation arrest have also had minimal impact. Looking at all this, what's your view first on the interest rate and then on the economy?
Well, I think we just had the minutes of the meeting yesterday. Sounded a bit hawkish in the sense that there's a clear understanding that inflation goes higher. But rightly so, as the governor pointed out during his comments and what we read, is that in a supply side driven inflation, unless there is generalization of the inflation that is being seen very explicitly, the RBI should not be hiking rates at this point in time. Now, out of the two readings that the RBI would be getting on the inflation before the next policy, we've already seen one reading where the core remains muted. The core is just at about, continues to be about sort of 3.9% headline. And the precious metals, it is about 2.5, 2.6%. And there is no clear indication of a generalization of the inflation at this point in time. But having said that, the challenge for the RBI is that their own data sort of indicates that the diffusion index, which tracks the number of commodities that are rising at various levels. The diffusion index from about the January 2026 to the July number that we saw has actually increased in favor of items that are growing at greater than 4%. So the question that the RBI needs to ask is, what are the critical indicators that they would be looking at in terms of sort of understanding that the spread of inflation is becoming more wider, and the expectations are sort of reacting in a way that inflation is getting entrenched in the system, which necessarily means that inflation is more permanent rather than transient, as a supply shock would determine. So on a view part, I think October we are not looking at any rate hikes. But if the other inflation data before the policy also indicates that there is no significant momentum, I think there is a probability that we hike in December. But at this point in time, understanding the inflation dimensions, I would still say that the probability is relatively low.
That's right, Indranil, because also, as you rightly mentioned, the generalization of inflation bit, as well as the supply side related inflation, and which can actually go away. But looking at the crude oil prices movement, it looks like that even if the war gets over in a couple of months, for this particular calendar year, we have been weighed down by higher crude oil prices. So that's the worry. But that added with higher interest cost will really have a double whammy impact on the companies as well as the market valuations. So that needs to be understood by the market and probably baked in if that were to happen. But to the second point, Indranil, crude oil prices and other supply chain constraints that we are seeing on a sustained basis, where this war really started on 28th of February. In this particular quarter, we are halfway through and we are still seeing that sustained pressure building in. How are you seeing the economic impact and also the various numbers that need to be reworked? I know that $80 per barrel was the average that we had penciled in. Is there a chance of reworking that, and what's your in-house view on this particular aspect?
Well, on the growth perspectives, I think broadly we have escaped the West Asia implication on the growth perspective in the first quarter. Probably because we had a sort of inventory build-up previous to the war that started, and therefore the input cost pressures were not as telling on the manufacturers as otherwise would have been. So my point here is therefore we need to see whether from the Q2 and the Q3 there are some pass-throughs that happen from the WPI to the CPI, which necessarily means that the goods portion of the CPI, which is about, say, a 30% of the total weightage of the headline CPI, that also sort of starts to increase, and that has its implication on the core. So this is a part of the whole sort of structure of generalization of inflation that I talked about. But having said that, I think the clear message here is that the second half, in terms of the growth, in my opinion, would be weaker than the first half, simply because of the West Asia crisis, the sustainability, the durability, etc., and the impact in terms of the oil prices we need to bake in. And along with that, we need to understand that food prices are relatively higher compared to the last year, which necessarily has a negative implication in terms of the real wage growth of both the rural and the urban sector, more especially for the rural sector than the urban sector. And in terms of the El Nino, the output of the rural sector will be weaker. So there is a double whammy for the rural sector, both from an agricultural and a non-agricultural perspective, which necessarily means that the consumption demand will possibly be weaker from the rural sector, and that will be manifesting in Q2 and Q3 more than it possibly did in Q1. So second half, therefore, weaker. We are still maintaining our view of 6.6 to 6.7% as the full year growth, broadly in line with the RBI's own estimates.
Right. Indranil, one important takeaway from what you commented right now is also the consumption demand, and especially from the rural economy. And that is a combination of crude as well as the El Nino impact. And are you already getting some data from the ground on the impact?
Well, yes. So in the sense that if I look at the Retail Association of India data and their survey analysis, it pretty much shows a weakening retail demand, especially in terms of the discretionaries. And that is becoming across the board. It's not really concentrated in one sector. It is across the FMCG as well as, say, for example, fashion and apparels and etc. So we are seeing a weak demand playing out, and to a certain extent we have, as I said, it's not really getting factored into the Q1 implication on the GDP, but definitely from a Q2, Q3 perspective, we should be factoring that in.
Right. So that's a new factor that is really developing, because we were trying to analyze the impact of this on the economy and the consumption for a while now. But Indranil, my final question, and this is going to be important, see, arrest of rupee depreciation has been a cause of worry. And of course, the Reserve Bank of India had taken steps. Now that steps and the measures on FCNR front are coming to an end. And we have capitalized on it. Up to $70 billion is what is expected. But is that enough? And what is the view on the rupee movement going forward? Will that be crossing the levels which could worry the Reserve Bank?
Well, I think, yes, as you rightly pointed out, an important question. In terms of the FCNRB, I was never on the camp which would have looked at a very sharp appreciation, simply because all the flows that are coming in are getting swapped in favor of the RBI. So the FX reserves actually go higher. It is not really circulating in the market and therefore impacting the demand and supply equation. So the point being made is that when that is the scenario and when oil prices go higher, obviously the demand for dollars go higher, and that therefore leads to a depreciation of the currency. Now, an even more important point is that, number one, yes, it has sort of beefed up the arsenal for the RBI in terms of quenching any sharp depreciation of the currency. But the other factor is that they might not be able to stand totally and try to depress the any currency depreciation pressures that might actually ensue from here on. Because when I look at the Q3 and the Q4 balance of payments, with oil at about a 90 to a 95, we clearly have a very slender margin in terms of the balance of payments. Now that most of the receipts in terms of the balance of payments and the banking capital through the FCNRB has accrued in the second quarter of the year. So my bet is that we will continue to see moderate depreciation pressures on the currency. And that is also because the interest differential between India and US is relatively quite low, which necessarily means that to the extent we can actually expect FPI flows, especially on the debt side, and with non-inclusion in the Bloomberg index, we might actually see muted flows on those accounts. So I would possibly expect end March current financial year USD INR at about a 96.50 or a 97.
All right, 96.50 or 97 levels by end of this financial year. Moderate depreciation is being expected. Indranil Pan, many takeaways from all the aspects that you spoke about on the economy and especially on softer consumption from the rural economy expected in Q2. Thank you so much for sharing your views on NDTV Profit. Thank you.
Thank you.
All right, moving on to an important development on news front, and SEBI has issued its first cash manipulation order flagging aggressive buying and also selling, and Mansi allegedly placed also and cancelled sell orders, with SEBI really impounding 3.68 crore rupees for the entities. In fact, lots of development on that particular front and the mismanagement there. Nimit Dixit filed this ground report. Let's take a look.
We're here at Mansi Share and Stock Broking. As you can see, we're at their office. We spoke to somebody inside. We rang the bell and spoke to somebody. It's a 3-floor office here in Avirahi Cooperative Society, largely a housing cooperative society, but the B wing here is corporate offices. The second, third and fourth floor of this office is all Mansi's operations. It looks like quite a large operation. We went to all 3 floors and we spoke to a couple of people here. The first person we spoke to says that the management is out. They're not available to speak. He refused to identify himself. He refused to give me a phone number, and he says that the management is all traveling. Nobody is here. I went up to the 3rd floor where nobody answered. I went up to the 4th floor. At the 4th floor, a man identified himself as Hiten Joshi. He spoke to me. Hiten Doshi, I'm sorry, and he spoke to me, and he also told me that there is no authorized person to speak on behalf of Mansi about the issue, the cash stock manipulation case that SEBI, the interim order that came out yesterday. What we understand is this 3-floor operation, when we peeped into the 4th floor, there were about 20 to 30 people inside. Here also there are quite a few people inside and moving. They say that there is nobody authorized here and all the leadership is out of town, and they may be available later in the week or next week. That's what they say, but we keep trying.
All right, that's a ground report from our colleague Nimit, and CAS has been implemented just a few days back, and already the crackdown on various manipulations taking place there. We'll keep on top of that developing story, but right now it's time to wrap markets at 12, but do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio. With me, Hital Datia and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. An interesting day of trade where
I mean, if you talk about the mid cap and the small cap, there is some mild moves that are coming in there. Again, it is a Thursday. The question is, how sustainable are these moves?
Well, that's right. Good afternoon, Hiral. And we had a good gap up opening, as we had pointed out earlier in IMO as well. But basically, this is happening like a basket buying is happening all across. For the last 12 days, we had seen higher lows coming in from Nifty. And interestingly, they have snapped the 6 to 7 day losing streak as well. Nifty Bank also, the story remains the same, especially the interest rate sensitive stocks. They are doing well as well. And we'll get to the reality aspect also, but they're maintaining it, they're sustaining it. But how much will it continue? That's important because Sensex expiry is also there today. So you cannot rule out volatility which might happen towards the closing. But looking at the key factors right now, the mid caps and the small caps, they are also doing well. And Nifty Bank, both have shown a strong reversal happening. Also, other key factor to watch out for would be this Thursday expiry at play, which I mentioned, but the sectors which are doing well, you should have a look at that as well. Yields are falling, rupee has strengthened. This is the most important news of the day. The macro impact globally is increasing the risk on sentiment as well. Sector specific reality, IT and sugar stocks, they are still continuing. Look at that, Balrampur Chini is up 12%. Good up move coming in the realty names, also one of the top sectoral gainers. But all sectors are in the green today. Basket buying, risk on sentiment comes back in the market, but how much will it sustain? That's the big question. Will it be bond yields? Will it be war issues? And also the options data is suggesting further up move. So it's not going to be downward. Little bit more short covering is taking place right now. And today, one data is something which we'll be watching out for is the US jobless claims data. But as of now, broader indices and the main benchmark indices are doing well on the macro relief.
Okay, so interesting moves coming in there. Let's quickly look at the watch list. Genius Power, highest levels in 39 sessions, strong moves coming in on that one. So that's the power company which is seeing some smart moves. Acme Solar as well, which is buzzing in trade, and that stock is trading at the highest levels in all times. Kiri has gained really 17% in the last two trading sessions, so something probably brewing there as well. Strides Pharma, the Bangalore flagship facility, has got a US FDA EIR, and that's a relief coming in for that one. Turtle Mint 4% up move. Jefferies has actually initiated a buy. They have a target price of 190. REC, you have Morgan Stanley, which has downgraded the counter to an equal weight, and they've cut the target price. And likewise, a downgrade coming in for a PFC as well from a MS, and that's the reason why both the counters are trading under pressure. SBI Cards is having an interesting day. 6% gains in last two sessions, and AB Capital. Now, the gold loan business expansion is what they're looking at, and that's the reason why that stock is in focus. Muthoot Finance as well as Manappuram, both of these counters are surging in trade on the back of strong gold prices. And again, you have your gold beneficiaries or gold loan companies which stand to benefit whenever you see a surge that comes in terms of gold prices. MMTC, I mean, precious metal surge is the kind of impact, and MMTC, as we know, is more of a trading company, and that stock is trading in the positive. KFin Tech is up 2.5%, and there's been a 1,400 crore block deal. You know, it's interesting to see how the block deal has actually not gone ahead and put pressure on the counter. Swiggy, where Jeffrey says IOCC transition moves closer, and that will be positive. You have sugar companies also, because the government is tightening the stock holding limits, and that's the reason why sugar companies are in focus as well. Wellspun Living has seen the highest level since September 2024, almost a one-year high. Redington is also trading at an all-time high. Eternal, almost a 10-month high coming in there. Netweb Tech as well, again, an all-time high. Hindalco is interesting because US-Canada tariff deal, this is something which may actually hit Novelis. And Novelis, as we know, is a subsidy of Hindalco, and that's the reason why you're seeing a cut of nearly 1% that is coming in on a Hindalco as well. So that's the watch list. But over to you, Sharad, to actually take the rapid fire as well.
Thanks a lot, Hiral, for that. We start our rapid fire. We are joined in by Himanshu Gupta. Good afternoon, Himanshu. Always a pleasure to have you with us. The first stock in focus is Genius Power. Good buying coming in, and a lot of meter-related stocks are seeing basket buying. What are the key levels to watch out for? Do you think more buying can start from these levels also?
Very good afternoon to you, and thank you very much for having me on the show. Well, absolutely. A sideways consolidation is actually followed by a very strong buy on heavy volumes. I think going ahead also some more buying can be seen. On the upside, I think the immediate targets remain around 360, 365 odd levels. And once that resistance and the kind of supply is placed around those levels is taken out, I think the stock is good to go towards 400 odd levels over the due course. So I think a strong setup and a fresh buying is initiated in today's trade. For short term, a stop loss below 310 can be placed in Genus Power.
Right, and Himanshu, now the gold prices are back on the uprise, and this is not the festive season I'm talking about, but the big up moves coming in because of the global tensions and maybe a hedge as well. Let's pull out both Muthoot Finance and Manappuram Finance. Out of these two stocks, which is a better risk-reward ratio, and is there a trade to be made here further?
So, if you give me a choice, I think Manappuram is a better placed chart. That one is still in a confirmed uptrend, and the recent correction from 375 odd levels looks like a technical pullback in an overall going uptrend. For me, levels of 335, 340 looks like a very good support and an area of demand exactly from where the stock has actually rebounded. So for me, Manappuram offers a good risk reward where a buying around current levels and even accumulating further around 340, 42 odd levels is recommended. A stop loss below 335 can be placed here, and on the higher side, I think 360, 365 can be seen in short term. While if you talk about Muthoot Finance, I think this stock is actually is already in a correction, and today's recovery is just a pullback in an ongoing correction. So for me, I think 3,100 odd levels holds a key area of supply and resistance for Muthoot Finance, and as long as the stock is not able to close above that level, I think we might continue to see some sell on rise in this particular count.
And Himanshu, next stock is K Fintech. Block deal happened, but a good absorption is happening from the institutions also, was what I'm hearing. And is there more value left in this counter, because there is a big correction from its top levels, but a good accumulation happening right now? What key levels to watch out for?
If you look at the long-term chart of K Fintech, the stock actually made a high of above 1600 in 24, and from there we have seen a very long price and a time correction. And if you look at this length chart of a 2 or a 3 years time frame, you will see that 750, 800 odd levels have actually managed to offer decent kind of demand and buying around those levels. Now a likely double bottom is already in place, and once the stock is actually able to close above 980 or 1000 psychological odd levels, I think it will be a very good risk reward on the cards, and it will be confirmed that the worst might be over for the counter. So a close above 980,000 odd levels would be a fresh confirmation to initiate fresh longs, and for the investors who have been holding on this stock will actually expect some momentum further building in, where positionally I think the targets closer to 1200, 1300 are on the cards over a couple of months.
All right, and another stock is Reddington, which we had featured earlier at KYC also recently. A good buzz coming, especially on the higher prices of the key products. Now festive season is also coming. How do you see this momentum coming in the stock also? Do you think there's a further up move likely going ahead? What are the charts suggesting?
Well, the stock is in a confirmed uptrend, stock trading above short and medium term moving averages, given a vertical up move and post a decent small exact textbook type correction. Again, from last 2 days, we have been seeing the momentum building up. My sense is that one can still initiate longs in this particular counter around 340, 350 odd levels. Keep a stop loss below 320, and I think on the conservative side there is a good chance that over the next couple of weeks the stock may go past levels of 400. So I think a very strong setup, accumulation and buying on dips is a recommended strategy in Reddington.
And for Eternal, what will be the trade call? Is there any risk-reward ratio looking good here in the current levels? Maybe after a round of consolidation for Eternal, because I think it has broken that 310, 315 mark.
Absolutely. So there was a clear area of supply around 310, 315 odd levels, but over last couple of days, I think a strong buying in this entire space, the new age companies and these platform companies is clearly visible. So my sense is that even if you enter around these levels, just keep some more space to add on some dips towards those 310, 315 odd levels, which are likely to turn into strong demand zone now. Maintain a stop loss below 290 on a closing basis, and I think targets of 365, 375, which were the all-time highs, are looking very much possible in the coming weeks for Eternal.
Yes, for Eternal there is a bullish stance, but can you say that for Swiggy also, or are there some questions left, especially on the technicals to look at?
So although we have seen some strong recovery in Swiggy over last couple of weeks and months, but the momentum actually fizzled out. Despite that, the stock is actually able to maintain a higher high, higher low structure on a short-term time frame. But given the fact the stock is actually trading below its 200-day moving average, and we have been seeing every time the stock attempts a recovery, there has been a selling at higher levels. So at best, what my best guess for now for Swiggy is that it might actually pave a recovery towards 310 odd levels. But beyond that, we need to see that whether it's the demand would be able to outpace the supply. So for short term, I think 310, 315 odd levels looks achievable, and the stop loss below 270 can be placed.
All right, thanks a lot for that. And that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks?
Thank you so much for that, Sharad. You know, it's interesting to see where on the second consecutive session, you're again seeing a IPO which listed recently, which is trending on Google. Let's pull up a ship rocket on the screens, and there you go, 5.5% up move coming in there as well. And this is after a spectacular listing that we saw. Now, the question is what's really happening with a ship rocket, and in terms of the business that they do as well. Logistic companies have been, you know, in focus as well. The stock has jumped 35% on debut, valued at close to about around 10,000 odd crores. You have a Goldman Sachs, which has a buy rupees 53 crore. Actually, they bought 53 crore worth of stake in Shiprocket, and on a 48% debut is what they've seen. Sharad Avasthi, head of research at PCG, SMIFS joins in. Sharad, welcome to the show. Always a pleasure to speak to you. How are you looking at a Shiprocket? Because a very strong listing. Do you see further moat from here on? Second day where you are seeing some moves around 5%.
Yeah, I think it's a good story because the whole logistics space is undergoing a very decent change post GST implementation, and the implementation of tolls being connected automatically. I think that is a huge advantage for them. The infra improvement is something that we continue to see over a period of time, and I think this is a space that could substantially improve going ahead in terms of what is the kind of turnover that they can achieve with the existing infrastructure. So I think this is a business across the sector. We will see improvement in logistics being used and the scale being improved. So I think the asset turnovers across the board for most of these companies will improve substantially, and that should result in very healthy bottom line accretion over the next 3 to 4 years. So we are very bullish on the whole space. So I think even Shiprocket should benefit out of that.
All right, but the sugar stocks have been the flavor not only for this week but the entire month. Looking at the government intervention, the first government intervention has come in. They have announced it overnight, especially on the stock holding units, and there are certain level of units which most of the players need to maintain it, and this will be of course applicable from 1st of September till 30th November. And looking at how the momentum has happened, we are seeing the sugar stocks rallying in trade. The domestic prices are above that 5,000 rupees quintal mark. Already 10 to 15% up move in the prices domestically in the month of August, and globally also the white sugar prices are at 15-month high levels. Of course, this is a shortage coming in from the El Nino impact, as well as the European production has come down. Of course, some concerns will be there on the ethanol diversion, but the sugar stocks have made merry. Most of the stocks have risen between 20 to 80%, or actually even more than that, from the 2026 lows. So, Sharad, just wanted to understand, the sugar stocks, which has been a tactical bet amongst most of the traders. Do you think good time to take some profits off, or is there some issue which might drive these prices up? Because the prices have gone up in a very insane manner in the last 2 to 3 trading sessions. Your views on it?
Yeah, so I think the recent curbs are something which are certainly dampening for the sentiment, and the price movement has been very robust. Our top pick usually earlier was Balrampur Chini, because we thought that size and the new capex that they were doing was something that put them in a sweet spot. Rest of the pack, we were not expecting prices to go up so much, because internationally we don't think availability is such a big problem right now. Maybe at max a season of change happens, but not beyond that. The ethanol story has already played out. I think now gradual improvement there will keep happening over the years to come. But we have so much hue and cry about T20 petrol and all that. So I don't think it's going to be a very smooth rally. So considering the current prices, I think, yeah, across the board, it would be better to book some gains and get out of most sugar stocks. Maybe EID parry among the larger names would be something that you could continue to hold. We are looking at targets of around 1,050, 1,100. next 2 years, then this year and next year, the numbers could be very strong for them. So EID Parry might be an exception, but rest of the pack, I think it's good to book profits at these levels.
Okay, so EID Parry is the pick coming in, and remember that the sugar sector is very volatile as well. But little bit of volatility coming in the metal space, and I'm talking about Hindalco, especially with the news flows coming in on tariffs, and it might impact its US arm, which is Novelis. To decode what's happening here, we are joined in by Parth. Parth, what's the actual story and what's happening with the stock?
So what's happening is that US and Canada are now nearing a trade deal. As per some talks, they have said that the tariffs on steel and aluminum products may drop from the current 50% to almost 25%. And this is a very big thing for the US because Canada actually supplies nearly half of US's imports of aluminum. And because Novelis is Hindalco's US arm, it directly sits between that crossfire. If we look at the overall impact, then Novelis obviously contributes around 60% of total Hindalco's revenue, and the 50% tariffs that were currently in place had push that Midwest premium in the US markets for aluminum. Midwest premium is basically that premium which is paid over aluminum products above that LME benchmark. So Novelis was able to capture this premium, and that was directly flowing into their bottom line. If we look at the numbers as well, then Midwest premium had crossed $1 for the first time, $1 per pound for the first time in history, and currently those premiums were running at $2,200 per ton. So that's the kind of realizations that Novelis used to enjoy. But if those tariffs come down, the deadline is Friday for the final talks. If those tariffs come down, then those premiums might narrow as the cheaper supply will hit the US markets. So that is something you need to watch out for in terms of Hindalco.
Thanks a lot, Parth, for explaining it, and that's the reason why Hindalco is also down in the trade. From one Sharad to other Sharad, I just wanted to understand one simple thing. Does this actually put in pain for this counter for Hindalco, or do you think there are more important opportunities left in the ferrous or even the non-ferrous space?
Yeah, I think so. The non-ferrous space, particularly, I'm more bullish. I think copper and aluminium have a long lead going ahead. Copper may be better placed because of the type of requirement, capex time requirement that they have. But I don't think that aluminium as such will be so bullish over the next 1.5 to 2 years at least. So and at these valuations, I think Hindalco is largely pricing in 9-10 times 1 year forward, next 2 years, not much growth expected. And this is a whammy for them again. So I don't think that it will make much sense to be into aluminium or metal or even the ferrous side of the stocks. But we are trying to, partially play the story through something like a Rain Industries or the graphite electrode kind of stories, HEG Graphite. I think they could do very well over there. Though HEG Graphite part of the story has played out, Rain Industry is a high-risk multi-bagger kind of story that we are looking at, has appreciated from the recent flows. But I think the type of dominant positioning they have in the product segment, I think they could be something that could be very attractive over the next 2-3 years.
Okay, so that's with regards to Rain Industries. But stay with us. Several stocks have actually seen a sharp target price upgrade over the past 1 month. However, if you have to look at the current prices, they've already caught up to those high target prices, leaving limited or probably no upside potential at all. There's only one outlier in this list, and Somit is here with more details to unlock as to which is that one outlier that you should be watching out for, which has the upside potential, and the ones which have already done the trick. Somit.
So what we have done here is what we have tried to see the stocks that have seen the highest increase in their consensus target price in the last 1 month. After finding out that, what we have come across is the fact that out of top 10, 9 of these stocks have already or very near to the target price that is assigned by the consensus street analyst. Now, and there's hardly any upside left in these counters. So already they have achieved those targets. So not much of an upside left for these counters. Cyan DLM, now the target price for this counter has been hiked by nearly 56% in the last 1 month. But the return potential is negative 3% odd. Kajaria, as Hiral was mentioning, is the only outlier here. The target price has increased by 40%, while the return potential still on the counter is nearly 50% odd. For other counters like Laurus Labs, Avalon Tech, RR Cable, the returns are in negative 13% to just positive 1%. While in case of Aether Energy, Sansera Engineering, ASK Auto, Gland Pharma and Acuitas Chemical, the return potential lies in just a single digit. The maximum that we could see here is Acuitas Chemical, which could give a return potential of around 9% over the next 12 months. So what has been the reason for this increase in target price? For Cyient DLM, it's the improving order book, and which leads to better revenue growth visibility. For companies like Laurus Labs, it's better margins and a better product mix going forward. Avalon Tech, again, an increase in the order book, which also increases the revenue visibility. For RR Cable, it's improving margins and improving growth outlook for the company. For Ather Energy, it is strong EV demand, upcoming new capacity, some platform launch, which will also increase the total addressable market for Ather Energy. For Sansera Engineering, it's a strong ADS platform growth and large order wins, which has led to analysts increasing their target price for this counter in the last 1 month. For ASK Auto, it's a structural growth outlook, which has improved. For Gland Pharma, better and medium-term visibility for the CDMO business specifically, and for Acuitas Chemical also. If you look at the CDMO pipeline, that has been scaling, and the specialty chemical outlook is also quite positive. But the one outlier, or the lone hero that I was talking about, Kajaria Ceramics, now the only stock which has a return potential of nearly 50-odd%. Why? Because the demand and volume growth are finally accelerating as per analysts. Morbi cost disadvantage has also aided Kajaria when it comes to competitiveness among its peers, and also capacity expansion is expected to support the next leg of growth for Kajaria. And lastly, the non-tile business is also becoming a meaningful portion right now and will aid the growth for the company going forward. So out of the top 10, only Kajaria Ceramics is the one which could give a return potential of nearly 50-odd% over the next 12 months.
Thank you so much, Somit, for that. So Kajaria is the lone hero over here. Sharath, your view, because on a consensus basis, you're seeing a 50% upside. The others are still in mid-double digits potentially, but this one is an outlier right now. Would you say valuations are good and this could be a potential to see that 50% upside?
See, I think for ceramics, one thing that would positively impact them, Miral, is that probably, going ahead, most probably we are expecting gas prices to come down internationally as well as at the domestic level, because over the next calendar year, gas availability should substantially improve. So that would be a positive development for them, because that's been a pain point for them. And I think beyond that, if you look at the numbers, this space usually trades at premium valuations. So it's already trading at 28, 29 times next year, 1 year forward. So maybe if you're very optimistic and this gas theory plays out over the next 1.5 year, you could see some margin expansion, and that could result in further re-rating. But still 50% upside to me looks like a bit of a stretch. So even if we consider next year somewhere around 45, 46 kind of earnings and 35, 40 kind of multiple, I think optimistic targets could be somewhere around 1400, 1450. That's what max I can look at right now.
Right, and even the management had stated that they are going to get benefit from consolidation, which we saw, especially what happened in January quarter. But another stock doing well is Turtle Mint Tech. After Jeffrey's report came in, they have initiated a buy rating, and the target price is also at 190 rupees per share. They have stated that there's a good momentum happening in the industry itself, and targeting 38% 3-year CAGR when it comes to the overall revenue. The scale is also driving a strong EBITDA margin guidance for FY29 as compared to FY26 loss, and bullishness coming in. The counter is up 4%. Sharath, a quick view on this company, Turtle Mint Tech.
Yeah, so I don't think that valuations are very stretched, considering if you consider it as a fintech or the new age EV kind of new age kind of company. I believe the valuations are 3.5 times EV to sales. Optimistically, they could trade at around 6-7 times. But our view is that maybe, even insurance, the primary stocks to whom they cater to, even they look very attractive at current valuations. So we are focusing more on the main business. Maybe after they have had a run up of 20-30%, that would be a time where we want to divert into something like a Turtle Mint. But since we are very bullish on the insurance space, we think even Turtle Mint should continue to do well. But I think at these valuations, I would be happier buying the insurance companies rather than a Turtle Mint.
Companies versus a Turtle Mint. That's an interesting one coming in there. Stay with us, Sharath. You have a Jeffrey's which has maintained a buy rating on a MV photovoltaic. That stock is up almost 4% in trade, and they've raised the target price to almost 440. Currently trading at 328. What they are saying is that the company is a quality company, valuations are absolutely attractive, and the early lead into TopCon cells, along with a robust order book and strong solar PV focus, is the key here. In fact, the net debt-free balance sheet supports the backward integration plans of the company as well, and they are pretty much well placed to sustain the industry-leading profitability that one is watching out for. In fact, they've gone ahead and raised their FY27 and 28 EBITDA estimates by 2% and 7% respectively, and they're forecasting nearly a 33% EBITDA CAGR over FY26 to 29, and they've said that after a 15% correction, the stock is actually trading at a 6.8 times forward EV to EBITDA, and the valuations are nearly at a 30% discount to peers, despite the strong growth outlook that the company poses. Would you also be a buyer, and would you also be of the opinion of what Jefferies is indicating right now, Sharad?
Yeah, certainly. I think, as you rightly pointed out, the TopCon technology is something that has been dominating the new capacity additions. It's a much better technology that we are working with. Add to that the fact that backward integration, basically, that is substantially aiding these companies, that should aid long-term, margins, basically the improvement in margins, and all of them have a very strong capex cycle. MV, in addition, the balance sheet strength is also much better. So we think the whole space should do very well, and if you look at it, 30-35% earnings growth we are also looking at over the next 2 years at least. Beyond that, I think maybe a year kind of stagnation could be there, but beyond that, the long-term capex cycles, etc., are very strong for the whole solar space. Even if you look at the capacity additions expected till FY31, they're very strong. So I think this will continue to trade likewise, and it's still trading at 13-14 times next year. So I think once these 2 years we see this kind of earning, it's easily possible, that this starts trading at somewhere around $500-600. So yeah, we are looking at targets of around 500-600 at 20 times FY28 earnings of around 30 rupees. So this should be a good story to hold on. Actually, the whole space we are very bullish on.
Okay, bullish on the entire space, but thank you, Sharad, for that. Those are interesting picks that Sharad has given us as well, which are fundamental calls, and I'm sure with regards to technical calls, you've heard from the rapid fire good takeaways coming in there. But thank you so much for watching. With that, it's time for a quick break, and a thank you from Sharad, the team that put the show together, and myself from the NDTV Profit Suzlon studio. We'll be right back. Lots more lined up in lunchtime trades. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and
Benchmarks extend gains with Nifty near 24,200. Sensex gains more than 600 odd points. Most sectors trade in green. Realty and IT lead gains. Meanwhile, crude prices hold gains supported by heightened uncertainty in the Middle East as the US and Iran remain at an impasse. The two sides are also embroiled in a confrontation over the Strait of Hormuz. Aditya Birla Capital a buzz after announcing foray into gold loans targeting 200 to 300 branches by March 2027. Glenmark Pharma gains after the US FDA approves its fluticasone nasal spray as well. And meanwhile, Swiggy shares also rally after Jefferies retains its buy call with its move toward IOCC status, expected to offer greater flexibility. Sugar stocks remain firm despite the government's fresh revision in stock holding limits aimed at cooling soaring prices. Sri Renuka Sugars, Dalmia Bharat, Balrampur Chini Mills, EID Parry and Triveni Engineering all see buying interest in early trade. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about the Nifty 50 or the Sensex for that matter, you're seeing quite the healthy jump also coming in. So 170 odd points higher when you talk about Nifty 50, and when you talk about Sensex as well, somewhere close to 650 points. There you go, 655 points thereabout. Uptick that you're seeing coming in there. When you talk about the list of sectors as well, it's actually a sea of green that you're seeing across the last trade on a sectoral basis, as can be reflected on your screens as well. So whether you talk about media, realty, financial services, IT or FMCG or rural and consumption sectors, all of those sectors in good shape. In fact, what's not in good shape right now is something like defense, this just about a little bit on the back foot and trading in the red at the moment. But when you talk about Nifty 50 as well, lots of gainers and losers to keep track of in terms of some of those stocks as well that are reflecting on your screens right now. So it's an Eternal that's doing quite well for itself right now, and some of the sugar counters, of course, are buzz and trade, but other than that, financial services also in good shape. Kotak Bank, Shriram Finance, Bajaj Finance, Jio Financial Services, case in point. Some of your IT stocks also, the likes of Infosys, holding up quite well right now, and of course Wipro add to that list as well. And other than that, there's also a bunch of counters on the flip side that are a little weaker on the day. So something like an HCL Tech from within the entire IT pack, it's actually a shorter list when you talk about the losers. So something like a Hindalco, Apollo Hospital, HCL Tech, some of those counters a little bit on the back foot. But that said and done, when you talk about the entire sugar pack, that is the one that's really in focus, decisively higher as well. So when you talk about something like a Balrampur Chini, Triveni Engineering, some of those counters buzzing away in trade as well. So that's the entire update that you have coming in when you talk about some of those counters, and we'll get you the action in terms of those counters. But tell you what, let's also quickly take a look at oil as well as gold. And when you talk about some of the key details as well in terms of oil prices, you do have some of those key levels, elevated levels, like $92 a barrel that have been maintained for quite some time. So the crude rally really continues to gain some traction right now on the back of Iranian tensions. And when you talk about some of the factors to really watch out for, it's actually Hormuz that's quite the worry yet again. So it's the economic pressure, of course, that has been ratcheted up, and that's the key commentary also coming in from US President Trump, who's also warned of tremendous economic consequences for any countries that have ties with Iran as well. And that's something that you're looking at. When you talk about gold as well, you're seeing quite the healthy gain being really held. So biggest gain in almost a month that gold is holding on to, as you can see on your screens as well. So extending that rally really. And when you talk about factors to watch out for, it's of course the Fed's commentary that's top of mind, other than treasury buybacks and some of those lower yield levels as well that are reducing gold holding costs. Add to that a weaker dollar, and that's also making things easier, not just for gold, but also copper. And that's also the one to also talk about, and we'll get you some more insights in just a bit. But before that, when you take a look at copper prices as well, holding up above $14,000 on the back of that rebound coming in after the supply squeeze that we saw coming in. In fact, we do have Ajay Kedia, Director, Kedia Advisory, joining us on the show right now. Mr. Kedia, a very good afternoon, and it seems to be a good afternoon when you talk about oil as well as gold. First things first, let's start with oil. Start talking about what's happening in terms of the commentary as well, because that seems to have really given the market something to worry about, and in terms of oil investors, really something to cheer about and take a look at some of those bullish levels, isn't it?
Yeah, surely, because see, now I think it's very much clear that whatever the concerns has been there in Strait of Hormuz will have to be continued, because the statement from Donald Trump against the Oman and also the supply side is again a chalk. Resulting Brent is trading near to $91, $92 mark on a technical ground. Also, we expect Brent could be a level we can see in Brent could be around 95, 96 again. So I think nothing new has been came from Middle East, and that is why gold is slowly and steadily moving towards 95, 96 level. But yes, there is a fireworks for gold. We can say a golden afternoon today, because yesterday we have seen after the bond buying announcement by US that has triggered the fresh buying in crypto, in equity, even in gold. We have seen a good breakout right now. Prices are very well placed above 4,500 level mark. Also from the FOMC minutes meeting, we have seen only 3 members were in favor of a rate hike. Other were under unchanged mode. The September rate hike is now neglected in the market, and that is why gold is getting very good strength. But yes, slight concerns would be there. First, $500 gain in last 15 days. Secondly, again, geopolitical tension will continue to support crude oil prices. That will create an inflation concern. However, the fundamental side, physical demand and ETF demand continue to support gold. So overall, we are expecting gold should be moving closer to 5,100 as we close this year. Overall, gold and silver both looks very likely to go up from here.
No, absolutely. And when you talk about some of those other factors in terms of the dollar strength, I just wanted to try and understand if you think that the gold prices have decoupled from the dollar in a substantial way, because last year, of course, de-dollarization was a key trend. Do you think that seems to have changed a bit, and there's an entire scope of things that you're looking at other than dollar as well when you talk about gold?
So the word de-dollarization will remain with us for next few years. So that means definitely economies are now making a way out from dollar and coming for gold. We have seen in last 21 months, China continues to add gold. So I think de-dollarization would be there. Coming on the linkages between dollar and gold, we have seen whenever there is some geopolitical tension, generally dollar gains as a safe haven buying, and also gold buys. But right now, yes, we can say some de-linkages has been there. Pressure continues to be mounted on dollar because of crude oil only we have seen crude because of crude gain. We have seen support for dollar was been there, but Chinese demand for crude, Chinese import for crude was been slightly lower. That clearly shows that other alternatives have been available in the market. So I think yes, dollar seems to be very vulnerable. We may see level like 96.50, 97 also. But in case of gold, I think geopolitical tension, central bank buying, ETF buying, even the supply side, we have seen overall in a year 35, 3600 tons is been extracted, but the demand from India and China totally comprised of 1800 to 2000 tons. That means shortage will remain with us with a central bank buying de-dollarization terms would be continued with us, which will support gold and continue to pressure on gold, crude oil.
Absolutely. And when you talk about the support coming in, not just for gold, right? Right now, you're seeing copper as well holding some ground right now after that supply squeeze as well. So what are you looking at in terms of copper prices? What kind of targets do you have in mind and what kind of momentum are you penciling in?
Yes, I think it's not only copper. We can see copper, zinc, aluminum, all these three metals are going very well. However, today market is slightly flat to negative, but holding near to 14,000 is a very good sign of recovery as supply has been continuously tightening. Also, the treasury yield has been came down. So I think inventory concerns, supply concerns will make continue to support copper. We are expecting at least copper to test around 14,800 to 15,000 level in next couple of months because of supply concern. Coming on zinc also, as we know that flood situation in China has got worse and smelter had cut down their production. No doubt, since January we were in surplus in zinc, but now the surplus has been continuously wiping out, and that is why zinc is also trading with a very strong momentum. On domestic side, we have seen prices on MCX has tested 400 level. However, from here also we are expecting at least 8 to 10% gain in zinc prices. Last would be the aluminium prices, as we know that Middle East concern continue to support aluminium prices. However, from 350 level mark, multiple of time market is slightly capping up, but I think the supply from Emirate has been slightly improved, but overall I think demand supply concern would continue to elevate all three metals.
Yes, no, absolutely, and that's something to keep in mind. Just very quickly before we let you go, just also wanted to take a look at crude prices. You do have Brent at $93 a barrel, as you can see on your screens right now. So it's quite the poke up that you've been seeing. That upward momentum, at least, is continuing to remain sustainable right now when you talk about crude prices, Mr. Kedia. So going forward, what are you expecting in terms of price levels if there is no escalation? And if there's an escalation, what's your bull case looking like in terms of prices?
See, 5 months back, when the escalation started, under repression, we have already seen $120. But now this type of surge is not possible because we have other sources that has been mined already. Secondly, OPEC has increased the production. UAE is also trying to push from the pipeline. Russia improvement has been there. So yes, there will be a positive sign for Brent. Maybe we can see a level like 96, 97, closer to 100 also. But sustainability is very dicey as of now. Chinese import is going to totally drop. Other countries are also shifting from traditional crude to renewable energy. That is why in short term, maybe because of supply disturbance and all, a level like 98, 99 would be possible for Brent. But as we move towards October, November, December quarter, I think prices should settle down again to the range of $78 to $80.
Yes. No, absolutely, and thank you so much for helping us out with that update as well in terms of going forward, what it's going to be looking like, because precisely that entire other routes as well is something that prices seem to be tracking very closely as well. Thank you so much, Mr. Kedia, for joining us on that note. Let's also move on and take a look at sugar as well, because those stocks are very much in focus after the government tightened stock holding norms to curb rising prices. In fact, Sharad is standing by with some more details when it comes to all of those stocks, by the way, Sharad, that are buzzing away in trade.
Well, that's right, Shansi. Looking at the overall interventions, this is the first time the government has intervened on the rising sugar prices. Now, of course, on the stock holdings, they have tightened those levels, they have ordered dealers that who use more than 10 metric tons of sugar should hold their inventories for not more than 15 days. Of course, this order itself is applicable from 1st September till 30th November, and there will be detailed analysis on that. But the impact what is there is the sugar prices expected to immediately cool off, and more announcements for sugar security can come. Agencies also reported a couple of days earlier that government may lower taxes on sugar imports. But as of now, looking at the stock momentum in the sugar stocks, the story seems a bit different. Remember, there is a tightening supplies coming in from Europe, El Nino impact from markets such as Brazil, India, as well as Thailand, and the pricing is really very high, 5,000 rupees per quintal, and this is the important rates which we checked from the major areas, lower monthly release quotas and declining inventories. Even the global prices are at the 15-month high when it comes to the white sugar prices. Already a strong momentum has come in the sugar stocks, be it Itpari, Balrampur Chini, Triveni, Sri Renuka, all of these stocks gaining between 20 to 80% from January 2026 lows. And despite the announcement coming from the government, in the day's trade, we are seeing a good buying happening across the sugar board.
Absolutely. Thank you so much, Sharath, for joining us with that update. And when you pull up some of those counters as well, when you talk about some of those sugar stocks as well, you're seeing quite the healthy set of gains coming in for all of your sugar stocks. So look at a Balrampur Chini up about 13%, 9% for a Mavana Sugar. So great set of gains coming in for some of those counters. Let's also move on and take a look at India looking to overhaul its bilateral investment treaty framework in a bid to attract greater foreign capital. In fact, sources are telling NDTV Profit that the government is reviewing the 2016 model BIT playbook as well. And Rishabh joining in with all of those exclusive details as well.
Right, this is going to be a crucial sort of overhaul that India is making to its bilateral investment treaty regime. What we've seen roughly about 10 years back is what India still follows is the bilateral investment treaty sort of template text that India has. That is set to undergo a major sort of overhaul, major changes. That is also expected to go to the cabinet for approval after that's happening. Now, what's changing essentially is the fact that there is more sort of investment-friendly approach that is coming in, more flexibility that is coming in, that India wants to adapt, more country-specific approach rather than a template that India wants to stick across various geographies, because there are sensitivities that need to be respected when it comes to investment flows between two countries. So in terms of changes, what we have is essentially a reduction in the domestic litigation requirement. Now, essentially, if an investor has some sort of an issue with any conflict that has come up, currently what they need to do is that they need to have about 5 years worth of domestic litigation before they can go to international arbitration. That has already been cut to 3 years in two of the bilateral investment treaties that India has signed, one with Israel and one with UAE. Now, as part of this further, making this further more friendly, that period is set to go down to 2 years. And that is going to be a major sort of friendly move to investors. What we're seeing in terms of more changes that could come in is also the fact that there could be a more inclusive MFN clause. Currently, with the BITs that India signs, most of the MFN clauses are either entirely excluded or limited. And now we're looking at something that's more workable. That's what we're picking up. We're also picking up that there could be a better, more friendlier dispute settlement mechanism that could come in. And also remember, India is looking to ink more and more of these BITs going ahead. You have more and more free trade agreements that have been signed with the EU, with Oman, and these are again partner countries that India is already friendly with. So a BIT is the next natural progression when it comes to boosting capital inflows as well. So that's what we're picking up in terms of an overhaul to India's BIT regime.
Right, absolutely. And while you're with us, Rishabh, let's also talk about India stepping up its engagement with Africa, with trade negotiations also set to expand beyond traditional partners. The focus really seems to be spanning critical minerals, pharma, autos, chemicals and energy as well. Let's talk about that one in terms of some key details here.
Absolutely. So a few days back, you had the South Africa Customs Union that India had entered negotiations into. This is, of course, a bloc of 5 countries in the south of the African continent. What we're looking at is essentially a lot of critical minerals trade between those geographies. Remember, Namibia, Botswana, South Africa, all of them have vast reserves of these critical minerals, and that is something India could look at tapping into. What India could help in in lieu of gaining some of these materials is more and more high value processing being moved to these countries, and then India could benefit from the output of those. That is something that India is looking at. What we also have is, of course, like you said, auto as well as chemicals being a major part of this trade union. What we're also seeing is that this SACU FTA could also result into more and more FTAs with other African countries such as Kenya and Tanzania. Now, Kenya, though, is a developing country. Tanzania is not. Tanzania comes under a least developed country. So most of these African countries are least developed countries, and they already enjoy tariff-free access to Indian market. But that is a call that India is currently mulling over in terms of how to approach these countries for a free trade agreement, given that tariffs are already pretty low for them. But we're also looking at certain East African countries in terms of boosting more and more trade with these geographies. What we're also looking at is that there's also energy that's going to be a major part of these trade unions and trade pacts that India does going ahead. So that's what we're picking up in terms of deepening engagement between India and Africa.
No, absolutely, and thank you so much, Rishabh, for joining us with all of those details. Let's also move on and talk about NDTV Profit, also exclusively learning that the Income Tax Department has identified nearly 11,000 crore rupees worth of real estate transactions with tax compliance gaps, and that's across 5 border states. You're looking at highly placed sources here saying that the CBDT has flagged over 14,700 property transactions in FY26, including more than 2,500 unreported deals. The discrepancies range from non-reporting and PAN misreporting to under-reporting of transaction values and cash components. You do have Uttar Pradesh that is accounting for the largest share of flagged transactions. The review has also revealed unusually high cash to tax ratios, and that's across multiple border states that you're looking at. So you do have UP in that list, Assam, West Bengal, Gujarat and Bihar as well, all showing cash deposit and withdrawal ratios that are significantly above the national benchmarks, indicating that cash activity far exceeding the reported tax base. In fact, sources are saying that the CBDT is now expanding district-level scrutiny and is going to be coordinating with agencies including the RBI, SEBI, and the FIUIND and the Enforcement Directorate, of course, while cross-matching tax returns, banking records, and other data sets as well to really strengthen some of the compliance checks when it comes to these lapses as well. So that's something that you're looking at in terms of the CBDT probe as well. And those are the details here. But let's also move on and talk about cyber threats really becoming more sophisticated at the time. And this is something that is very much a lunchtime conversation. It's a dinner table conversation as well. AI is reshaping the digital landscape. Cybersecurity is moving from an IT function to a boardroom priority as well. So Checkpoint Software, that's one of the world's leading cybersecurity firms, seeing significant opportunities in the country as enterprises really ramp up the spending to secure cloud network and AI infrastructure. In fact, here's a snippet of our conversation with the management.
I'm going to ask you start by asking you a very basic question, which is going to be around cybersecurity, but also about the company. Because Checkpoint as a company was known for its firewall, and you've transitioned from there to being a company who is now, a big name in terms of where cybersecurity goes. So how have you seen these trends change? And going forward, what does cybersecurity bring on table with the way we're seeing AI evolving?
Yeah. Well, thank you, Mahima, and thanks for having me. It's a pleasure to be here. You started it, you framed it well. We are a company that was started when the internet started. And Gil Shwed, our founder, literally invented the first firewall, which enabled the world to securely use the internet. It couldn't be a more exciting time for me taking over and getting into his shoes to do the next phase, which is in this incredible moment in time where we are introduced to technology that we don't even understand completely yet. It is our mission to secure our customers' AI transformation, which is probably going to be bigger, faster, and more impactful than anything that we have seen so far. So the firewall still remains at the core of the network, but we just introduced the industry's first AI network firewall. And on top of that, because at the end of the day, in order to secure our customers' AI transformation, we need to look at it holistically, right? So it's the network, but it's the people, the workspace, AI security, the intelligence around this, and the way to orchestrate all of this into one platform.
That's a very interesting answer. But the other fact that Checkpoint as a company has been in India for several years now, right? What do you make of trends specifically in India where cybersecurity is concerned, and what is it that you think that is still a gap versus the global players that have, and in cybersecurity specifically, where do you think we lack and where there's more scope of improvement in?
Right. So I think India is in a very interesting place in this puzzle that we're looking at in cybersecurity today. First of all, as a market, it's a very interesting market. It's huge. It's very advanced technologically. If you look at the financial system here, it's completely digitized. Obviously, one of the biggest ones in the world, if not the biggest one. From a geopolitical situation, also in the mix of very interesting things that we're seeing in the world right now. And when you put these two trends together, I think that this is a very interesting market. For us at Checkpoint, on the one hand, we're proud to be on the security side of some of the biggest organizations in India. And at the same time, for us, this is not just a market where we're looking at as a vendor, but also there's incredible talent here in India. Entrepreneurs, engineers, ambitious young people that are embracing these new technologies. And so we're also building our second largest R&D center in the world here in India. To your question about how we see the gaps, well, we're all in this right now because we're at a transition time. We're literally between two paradigms of cybersecurity. From what I've seen in the last few days, speaking to the leaders in the industry, in the government, in the military, I'll tell you this, the level of awareness and the level of collaboration is actually very promising.
All right, and that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of Interaj Building. Now, the stock is down nearly 26% on a YTD basis, but recently the company has announced an order win of close to 128 crore rupees. So what's the outlook and what's the way forward for Interaj is something that we'll try to get the answer from the management today on the show. Apart from that, we'll be discussing stocks like Vedanta Learning. At one point of time, the stock was up more than 15% in trade. Its biggest intraday move that we have seen in this month. And volumes, if you look at, were nearly 30 times its 20-day average. Apart from that, there was Solara Active. The stock has been gaining for the third consecutive session. It's up more than 15% in trade and has gained nearly 20% in the last 3 trading sessions. When it comes to Cantabile Retail, that stock has been gaining for the second consecutive session on the back of strong volumes. Volumes are nearly 10 times its 20-day average. And lastly, we'll be speaking about Good Luck India. The stock has been gaining for the third consecutive session, but so far in the month of August, the stock is down nearly 4% in trade, snapping its 4-month gaining streak. So what's the buzz around Good Luck India is something that we'll try to decode with our fundamental guest on the show, that's the Small Cap Buzzers. Now, if you look at the market, the Nifty has snapped its 7-day losing streak. It's up nearly 170 odd points, but the positive news here is that Nifty is now trading above its 50 DMA, close to around 24,250 level is what the benchmark index has been trading around. On the banking side, the bank index is up around 360 odd points, tracking exactly what Nifty has been doing. On the sectoral side, all the sectoral indices are trading in green. And this is something that we are seeing after nearly 7 trading sessions. The sector which is seeing the lowest amount of gain in Nifty PSU and Nifty Metal, up just around 0.2 to 0.1%. And on the flip side, it's Nifty Media, Nifty Real Estate and Nifty IT, which is up anywhere close to 1 to 2.5% in trade. When it comes to the small cap index, that's also been trading in green. But which are the key stocks that are buzzing here? On the gaining side, we have Chronox Lab, which has hit an upper circuit of 20%. Bharat Global, which has again hit an upper circuit of 20%. Suzanne Electric, Solara Active. A lot of sugar stocks have also been buzzing in trade, up anywhere around 11 to 12 odd percent. Banari Aman Sugar, Dwarikesh Sugar, Ugar Sugar, all up around 10 to 15 odd percent in trade. On the losing side, we have Delton Cables, Bizotic Commercial, Ujas Energy, Indot High Securities, MVK Agro, down anywhere between 5 to 10 odd percent in trade. But let's also welcome in our fundamental guest, Lancelot Dicona, CIO of ValueX Wealth. Connect LLP. Lancelot, coming to you firstly on the sugar stocks. A lot of news flow coming in here. A lot of small cap and mid cap sugar stocks have been buzzing in trade. How are you looking at this space overall?
I think these sugar stocks have risen considerably over the last couple of sessions as well as over the last 2-3 months. And if you look at valuations, they are higher as compared to their traditional valuations. And so one has to be rather careful because whenever you buy on news, you are paying for the future. And sometimes the future can be cyclical or can get impacted by various things, including the sugarcane procurement prices, commodity prices, and so there may be a lot of uncertainty that can play into the valuations, and that could result in negative surprises going forward. So one should be a little cautious, and probably a good time to buy sugar stocks is when the valuations are low and they're at the bottom of the cycle.
Okay, some exclusive news flow coming in here. Shrimi Chaudhary is picking up, is saying that it's on cash system. They are saying that there wouldn't be any fundamental change envisaged in the existing cash framework. They're also saying that changes could be considered to improve the efficacy of this cash mechanism, but there won't be any fundamental change. SEBI's market regulation department has been working with brokers and stakeholders on implementation of these changes. And when it comes to the Sensex cash order, what Shrimi Chaudhary is picking up here is that any system can be vulnerable to manipulation. Regulator continues to deal with such instances firmly, and the focus of SEBI continues to remain on strengthening the cash mechanism to minimize the risk of manipulation. This is what our reporter is picking up. It's SEBI sources on cash. So basically no fundamental change, but there could be some efficacy improvement that could happen on the cash mechanism is what our reporter is picking up. But moving on to the first stock that we'll be discussing today on the small cap side, it's Solara Active. The stock's been buzzing in trade. It's up nearly 15%, has been gaining for the third consecutive session. What could be the potential reason behind this move? Let's try to get the answer from Varsha.
It's up almost 18% in the last 3 sessions, and let's see what's been working for this company. What are some key triggers? Because we know that the ibuprofen weakness that the company is going through. But let's see what's working for the company. One is of course the debt situation, which has been improving. Net debt, if you see, has been reduced by 135 crore in Q1. And now stands at around 479 crore, though company wants to take it to 450 odd crore by FY27, and long-term goal 0 net debt by FY25. For the next 12 to 18 months, these are some 3 to 4 priorities that the company has. Of course, growing existing business, then seeding new business opportunities, and improving operational efficiencies and improving free cash generation. Now already a company has a lot of capacity to augur growth for the future. So manufacturing sites in Bangalore, Ambernath, where the average utilization is around 70%. That means existing capacity can support growth for the company. Now, talking about ibuprofen business, which is a major pain point for the company, they are going to decide the future of ibuprofen business by H1 FY27. Likely they're going to sell this division, but we'll know by FY27 what's the update on that. Strategic review outcome expected with Q2 results. Management is evaluating options for underperforming business. So we all know the pain point for ibuprofen that the company has been going into, but there are a lot of other factors, other key triggers that is working for the company, and hence we're seeing the stock is up almost 18% in the last 3 sessions.
Okay. Lancelot, any view on Solara Active? The stock's been gaining. Varsha's talking about multiple factors here. How are you looking at this counter?
So I think there are definitely improvements on their business front, and there is an improvement as far as the outlook is concerned. But you look at the valuations, it's trading at such a high multiple, and we will see growth coming in only in the future. And so you're paying much in advance of any future growth. So I think one needs to be a little bit cautious about purchasing at this point in time.
Moving on to Veranda Solution, the stock was gaining in trade today. Its volumes were quite strong on this counter. In fact, the move that we saw on an intraday basis was the biggest move in this month. At one point of time, the stock was up as much as 50-odd%. Let's get in Jasmeet to understand what does the company do and what's the way forward for them.
Well, Samar, thank you for that. As rightly said, the stock has been gaining in today's trade, but let's quickly understand what does the company do. While the company operates as an edtech company and has also multiple divisions, it operates into commerce, the government test, as well as the regular prep system. Now, if you look at the stock moves, we have seen a cyclical movement in terms of the overall stock. If you look at the key movements over the last 6 months, the stock has gained about 33-odd%, and over a year it has rallied nearly 11-odd%. But what's interesting is the rally which we are seeing in this particular counter since the lows from the March. Since the March lows, it has gained about 84-odd%. So that's something that remains a key focus of this particular counter and nearly doubled almost in like 3 to 4 months. Now, we look at the Q1 cycle of this particular counter. The Q1 quarter was quite interesting and saw great momentum. Given if you look at the revenue figure, it's up nearly 42-odd% on YoY basis. And the top key reasons what led to the overall growth in the Q1 is the broad-based growth that we are seeing. Not just one sector or two sectors, but all the sectors of the company have performed well in the Q1, and that's why we're seeing the up move coming in. If you look at the other key highlights, the overall commerce segment of the company has delivered well. It's up nearly 50-odd% on this is the growth I'm speaking about on YoY basis. But we also note that the overall enrollment crossed nearly 1 lakh. That's crossing the 35% increase on YoY mark. Further, we also see that the collections have increased in this particular quarter, which was slightly concerned earlier. It has increased by nearly 27% in this Q1, and also the PAT has remained positive for the 6th consecutive quarter, showing the continued momentum cycle of this counter. Now, if you look at the segmental performance, we do note that the overall commerce grew the most, up nearly 53%, while the government test prep grew nearly 41%, and the K-12 segment of the company has also seen a growth of nearly 22%. Now, well, the interesting aspect comes here in terms of the overall guidance by the management. While they remain bullish going ahead, and they also want to close FY27 with a revenue target of rupees 650 odd crores with EBITDA of nearly 260 odd crores and PAT at 144 odd crores compared to the current level. Now, if you look at the long-term guidance by the company, they would want to target the overall commerce chain by roughly 1,000 crore revenue by FY30, and they target the overall commerce to expand its drop from in terms of revenue by almost 450 odd crores in the coming quarters as well. Last, if you look at the government test prep target, they target nearly 100 crores revenue from this particular segment with an EBITDA margin of roughly 40-odd% in next 4 to 5 odd years.
Lancelot, your view on Veranda Solution, the stock performance has been quite volatile. Do you even see interest in any of the, if not this, in any other education stock?
So actually, Veranda is also looking quite interesting because given that their outlook is looking a lot better and the space seems to have stabilized a bit, we expect that they should be in a position to improve their EPS, to about 15 rupees per share, which would actually bring it down to trading at about 15, 16 times forward earnings. So that itself is a good sign of and a good entry point probably. But one needs to also consider that whether this improvement that we saw in the last quarter is sustainable over the next year or couple of years, because there's a lot of competition in this space, and we see various other players also getting into this business, and that could result in with the competitive intensity increasing, there could be more pressure on the margins going forward. So I think one needs to be a little cautious, but yes, definitely looks interesting at this point in time.
Okay, let's slip into a short break and we'll be back with more news on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No, no.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. Let's get in Shivam to understand what's been buzzing around with Canterbury Retail today. Shivam, what are you picking up here?
Yes, so Canterbury Retail, the stock has been gaining for the second straight session, and the volumes have also been growing strongly. In fact, the volumes in today's session has been up around 10 times to its 20-day moving average. So there has been no specific trigger for the positive movement today. But if you look at the Q1 results which the company has announced few days back, the results were on the positive side. In fact, the strong momentum has been continued from the FY26 year, and also the revenue growth that was mainly led by the strong execution and the store addition of around 15 which was been done in this quarter. Also, the same store sales growth has been around 4.04%, and the volume growth has been gone up by around 7 to 8%. That has also reflected the strong demand momentum in the market. Also, if you look at the average bill value, that has rose around 11%, and average selling price has also gone up by around 6 to 7%. Also, the financials, the revenue has been gone up around 13%, and net profit of the company has also gone up by 11%. So overall, the quarter has remained positive for the company, and the management has stated that the company is witnessing a positive consumer traction with also the store productivity improving, and also the positive demand environment and value fashion remains a core opportunity for the company. In terms of guidance, they are aiming for a revenue of around 1,000 crores for FY27, and in terms of EBITDA margin, they are targeting a EBITDA margin of around 28 to 30%. So overall, the Q1 results for the company has been positive, and this could be one of the reasons that we are seeing a positive momentum in the stock.
Okay. Lancelot, Canterbury Retail at current valuations, is it even attractive, or there are better retail opportunities there?
So I think, the retail space per se is in a very difficult place because, there's a lot of competition. There are various delivery methods that have opened out. Distribution has changed from being a store-based distribution to actually net-based and delivery-based, and a lot of these apps are selling their garments, etc. So I think you are seeing there is going to be pressure both on revenue as well as on growth, and there may be short-term, growth spikes. But when you are paying a higher multiple just because the short-term spike and it's unable to sustain over the longer term, then you will find valuations correcting steeply. So I think one has to be a little careful of the space. Overall space itself is in difficulty, and Canterbury Retail is doing better than most, but still one needs to be cautious at this point in time.
Well, as promised, let's get in the management of Interarch Building Solution. Manish Garg, the Executive Director and CEO, is joining us. So, firstly, to start off with, you have upgraded your FY28 revenue guidance, I believe, to close to around 2,700 crore rupees. What are the factors because of which you are this confident? And what is your current order book, which is also lending this kind of a visibility to you?
Sure. Good afternoon. Thank you for getting me on the show. So, two reasons for us to have upgraded our future projections for 28. One is our heavy structure steel line at Andhra and our Gujarat new plant will be fully factored in FY28. We started the phase one of Gujarat last month. We are going to be starting the phase one of HSS trial production very soon. So number one is because we will have this capacity kicking in fully in 2028. That's one reason we will have capacity to service. Second is our order book was about 1,860 crores when we spoke last couple of weeks ago to the investors. And with very large orders like the one we declared just now for a huge FMCG player in south of India and a lot of other orders coming in, our order book is making us more than confident that our execution speed will also increase and our order book will be close to about 2,000 crores and growing. So these are the two factors, the major order wins as well as the capacity being created and available to us next year is something that made us confident to raise the 28 projections to 2,700 crores.
Right. Now, when it comes to heavy structures, that has been positioned as the next major growth driver for the company. So what is the kind of revenue and EBITDA potential that you're seeing specifically from heavy structures, say for the next couple of years?
Yeah. So heavy structure is, I should say, is an organic way to grow. It is being used for making different kind of buildings. So it is in the same space. But when we call our conventional business as pre-engineered steel buildings, this is the sections which are heavier than that. So it is used for multi-story buildings, be it institutional, commercial, shopping malls, particularly, data centers. So it's not really, I should say, a new line of business, but yes, it is a new manufacturing line capable of producing products which are mostly required by the multi-story and the institutional and the data center segment, which is growing very, very fast. And therefore, we wanted to set up the specialized plants. But it is not really a separate line of business with different EBITDA levels. But yes, since the capacity is going to get added to the extent of maybe 70,000-80,000 tons in next 1.5 to 2 years, therefore, on an overall basis, it will make sure that we have a little bit of more operating leverage and then some basis points upside in the margins.
Okay. And when it comes to margins, actually, I was going to ask you that only. On the EBITDA margin side, what is the kind of number that the company is internally targeting, say, for FY28 or by the end of FY27? How much of an expansion can we see?
Yeah. So if you look at our Q1 results, our top line grew by 20%, but our EBITDA grew by almost 25%, as we can see on the screen also. So we are working on both sides. One is on our internal efficiencies, which is operational excellence. We are putting a lot of automation in our plants. We are working on bringing in technology to make us more efficient. So we are looking at internal efficiencies to take the EBITDA margins to the next level. And also on the market side, the market is very, very positive. And particularly for us, we are now championing in the large and complex projects for semiconductor and data centers and very big manufacturing units, wherein there is not much hyper, price competition. So we believe that a combination of premium pricing by some, percentage points, coupled with the operational benefits, should push our EBITDA margins a bit higher in 2028.
And lastly, sir, just wanted to check with you the capital expenditure plans and the fundraise that you're doing. How will that aid this on that front? If you could share some light.
Sure. So we are raising the QIP for 250, as you know, out of which bulk of it is going for our capacity expansion, which is a brand new plant in Gujarat, which is very similar to the plant one that we have set up with our internal laterals, and 2 heavy structure phases, which is HSS 2 and 3, because HSS 1 is ready. So you can say that with this about out of 250, about 190, 200 will get utilized for the phase 2 and 3 of the heavy structural steel and a new plant in Kheda, and all of it in next 18 to 24 months. So that is where it is being used to enhance the capacity, and the balance 50 crores of the QIP goes into the working capital and the GCP expenses. So it's majorly used for the capacity expansion to service the kind of order book that we have.
Thank you, sir. Thank you for joining us and giving us the way forward for Interaj Building. That was the management quite optimistic on the growth plans going forward. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A new Nepal, new possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you Hello and welcome to NDTV Profit. I'm Sharad Dubey and you are watching Ask Profit Afternoon Edition, a show where we get to you all the stock related queries from our fundamental and technical guests as well. And of course, on the top of the screen, you can see the number. You can call in there or even message us from these numbers to get the entire picture of the stocks on your queries. But let's have a look at the market. What's happening here, and we have seen a good gap up opening and it is sustaining in the day's trade. We are near the day's high level, that above that 24,200 mark. Let's pull up the Nifty Bank and see what's happening there as well. Largely a good momentum coming in. Let's get in the sectors also, and after that we'll get to the constituents also of what's actually happening in the market. A good basket buying happening. Most of the sectors are in the green and no major sell-off happening. If you look at it, media, realty, IT and private banks all are doing well. Of course, we had picked out the trend for you earlier at NDTV Profit for the media stocks, and now a good momentum is coming in. Let's get into the advanced decline ratio also to show what's happening, in the broader markets, and largely a good SMID buying is happening across the counters, and that's almost 2:1 in the ratio of bulls. I'd like to point out the top gainers also in the Nifty or the entire Nifty chart. If you could get in the heat chart for the Nifty indices to show where the momentum is there, especially in the large caps. We see Eternal, Kotak Mahindra Bank and financials doing well in trade. A little bit of sell-off coming in, Hindalco as well, a little bit of concerns coming in. But coming back to our show, the Ask Profit afternoon edition, we are joined in by two guests. We have Jatin Kedia, he's the VP at Technical Research at Teji Mandi, and also Astha Jain, Senior Research Analyst at Haim Securities. Good afternoon to both of you. It's always a pleasure to start our conversation. Jatin, we'll start with you. The first query is coming in from Rajesh Sure from Hyderabad. Now he's asking about companies Sansera Engineering and Azad Engineering, and this is a technical call. He hasn't asked for his key levels, but what would be the important levels to watch out for, Jatin?
Yeah, see, in the case of Sansera Engineering, the crucial support is placed at 3651 on the downside, and the resistance is placed at 4100. Overall, the trend is positive, so continue to hold on. In the case of Azad Engineering, the crucial support is placed at 2680 on the downside, and the immediate resistance is at 3000. Both these stocks are in an uptrend, and any intraday or a pullback towards its short-term averages should be considered as a buying opportunity.
Right. Another query is coming in, and this one, the name is not there, but this is John Cockrell. That's coming in from a sender, and they want to hold or exit. Of course, the period is a month, but fundamentally speaking, Astha, I want to get you on this. John Cockrell, how does this look?
Hi, good afternoon to everyone out there. So talking about John Cockrell's stock, first of all, it is a very high-end engineering company, and it is a very strong capital goods story. I mean, turnaround story, I should say, turnaround story in the capital goods space. The only problem right now is about the valuation of the counter, because the valuation is on very high side. Although their order book visibility is very strong, the kind of numbers they have posted were also very good. But The main problem is with the valuation, which is looking very high at this point of a time. And this company is basically, they are into the highly specialized steel, equipment, highly specialized equipment and systems, basically. And they provide these systems to steel producers. The only problem is with the valuation. So right now, my idea here is just to hold this counter and hold it for a long term. In the short term, we might see some sort of a valuation correction in the stock prices as well, but it is a good long term story to believe on. So stay invested with a price target of 8,500.
Right, and next query is from Mamta from Bengaluru. And the question is, Vedanta 240 shares has been bought at around 303 rupees per share. The question is for the long term, average, hold or exit. I just wanted to get your views again on Astha on Vedanta. 303 is the price. Currently, it's a slight dip, not that much also, but stock doing well technically. Your view on it long term, Astha?
So for Vedanta, long-term view is positive because we continue to see a traction in the metal space, and Vedanta being one of the major beneficiary with the kind of value unlocking they have done with the demerger, I think. And this company is a very good dividend giving company, we all know. So I mean, investors always like these sort of companies. So my idea here is that Vedanta, one should remain invested in the Vedanta for the long term. No need to exit from this counter. And in fact, even if anyone wants to do averaging, because here the cost price of our investor is 300 also. So averaging can be done, but not at the current level, maybe at the level of 260 to 258.
Right. Next query is from Puneet. He has 60 shares of, Euro Pratik sales at 247 rupees. He wants to increase his position or add more. Jatin, anything on the charts for this?
Sorry, the name of the stock, please.
The stock's name is Euro Pratik sales. And he has bought it at 247 rupees per share, 60 shares.
I'm not able to find the code. If you can help me with the code.
It's in BSE Euro Pratik sales, if you could just get this one. Yeah, this is the stock we're talking about, Jatin.
Yeah.
Good time to accumulate?
The support is placed at 248 to 244, so that would be a good level to buy. Currently, the stock is in a consolidation mode, and the previous swing low is placed in the range of 248 to 250. So I think around that level should be considered as a buy.
All right, so that's the query coming in for Euro Pratik sales. But another important query is coming from Nand Gopal, Bengaluru. He wants to know about Veranda Learning stock. Is it a good time to buy it for a 1 year? This query is coming. Of course, the stock is also buzzing in trade. I just wanted to understand Astha view for 1 year for Veranda Learning. Is there any special situation at play?
So for Veranda Learning Solution, I think this is one of the very good story. Just if we have to believe with the Q1 FY27 numbers, then definitely the numbers are on the higher side, because what we have seen is the 40% jump in their revenue. And in fact, the profit has shown exorbitant growth. So my idea here is on the back of very strong numbers. And for the most important part of this whole business is the kind of enrollments. So I think the enrollment number is around 1.04 lakh, if I'm not wrong with my memory. Then previously it was around somewhere around 78,000. So we have seen a rise of more than 30% in the enrollments. So enrollment is a very important indicator for this kind of a business where we have seen a very strong jump. So my idea here is definitely this is a very good story, long-term story to believe on kind of the environment we are into. Like, because we all know that the government exam preparation, they prepare for government exams, etc. And my idea here is, yes, this is the story which will be here to stay. So yes, one should remain invested in this counter for the price target of 280 to 290 in the short to medium term.
And next viewer we have is Virupaksha from Bangalore. Now they are holding 1,000 shares of Electro Steel Castings at 95 rupees per share. If you could get that chart in as well. And they haven't actually given their overall, timings, but I'm assuming this is for, you could say, a trade. Jatin, wanted to get your views on the counter. Is it looking like consolidation here, or is there something more?
Yeah, see, overall the stock is in a consolidation mode between 68 and 79 on the upside. So Until and unless the stock, manages to sustain above 79, my sense is that the consolidation is likely to continue. If someone wants to average, then 68 is a crucial support level. Yes, he can average at current levels as well.
So you can average it at current levels as well for electro-steel castings. The next question is from Siva from Amravati. Interestingly, he's holding 500 shares of Coforge at 1800 rupees per share. Can he hold for 3 months? Jatin, I wanted to get your views on this.
Overall, our view on the outlook on the IT sector and in particular Coforge has been positive. Today we have seen a breakout above the 2-week consolidation. So yes, up move likely to continue in terms of upside. 1980 is the upside target that we are expecting. Support is placed at 1770.
All right, we have got an international query from Ireland. We have Sai Pranav has stated that he wants to know Zaggle for a long-term period of 5 years. Remember, the stock had taken a big beating and ace investor Vijay Kedia had acquired stake in the company, and the fall of 20% is literally negated in the last 2 trading sessions, and they have covered that up as well. 5-year view from Sai Pranav from Ireland. Astha, your view on Zaggle Prepaid?
So 5-year view is really positive for this counter, and my idea here is the kind of ace investor has taken entry into this counter definitely makes this counter an attractive destination to deploy the funds, and especially for the longer term purpose. So yes, one should hold this counter for 5 years, although immediate target can be set at around 220 to 230 odd levels.
Well, our conversation with international viewers continues. Interestingly, Hanish from Sydney has also messaged us, and he has asked, is it a good time to enter DigiLogic for one slot? I think the amount is pretty high, 24,500. We'll just check that. Actually, the stock is around 204 rupees, sorry, for 6 months to 1 year time frame. Do we have this stock, DigiLogic? And Jatin, your views on it, if you could get any? DigiLogic is the stock's name.
Yeah, I think it's locked in upper circuit today. It's around 204.60 if I have got the stock correct. So overall the trend is positive in the stock, and if someone manages to buy or get shares, then he can continue to hold. The support is placed at 188. On the upside, 225 would be the near-term target.
Right, and another query coming in from Bhagya Lakshmi from Chennai, and the ask is, can Ship Rocket be held for the last 1 month or just a 1 month trade? Remember, it's a new listing also, so there is volatility, but a good buying is happening post the IPO also. Is there any juice left for a month's trade, Jatin, or do you think the up move has already been captured?
Yeah, since it has listed only yesterday, there is a lack of chart data for me to analyze. So I won't be able to comment on this stock.
Right. Sugar stocks is also something which is buzzing in trade, and this is a query coming in from one of the viewers of ours. Should they enter Balrampur Chini Mills? Is a good time to buy this? Astha, I just wanted to understand, because a lot of positional moves is happening. Tactical bets are coming on sugar stocks. We also mentioned almost 2.5 weeks ago already at NDTV Profit. But do you think there is more momentum left for sugar stocks, or is there something structural at play?
So I think already we have seen a very strong jump in today's trading session for these stock. Not only Balrampur Chini, but the other sugar stocks are also rising. And the most important trigger for all these sugar stocks is that the domestic sugar prices, which have already risen to around 8 to 10%, I mean, in past few months. And now the prices stand somewhere at around 4,400 to 4,800 per quintal. So, and these prices hold importance because they are at their 7-year high. So that is one of the major trigger which is just playing for all these sugar stock. And then we are seeing a strong rise. Now talking about Balrampur Chini in particular, they are having a very strong distillery capacity. Ethanol is positive for them. And I think Balrampur Chini is becoming very, very interesting with the because they are developing some, manufacturing facility for PLA project. Now, what this PLA? It is polyacetic acid, and this is a biodegradable project. So this is one of the major trigger which can work for the Balrampur Chini in long term. But in the short term, on the back of the rise in sugar prices, we have already seen sugar stock surging. So entering at this point of time is not making any sort of sense. Maybe at the lower level of around 700 to 680 to 690 can be the right level to enter.
The stocks have rallied, not a good time to enter sugar stocks now when everything, the sector is overheated. But another query coming in from Vikram from Bengaluru. And now the stock's name is Transformers and Rectifiers. It's called Taril. As the average buying price is 291 rupees. That means, of course, there is a loss coming in, 1150 shares. And his query is, he's a long-term investor. The stock dropped from the 357 levels to 391 and now it's below his buying price. Should he add more or book the loss and move ahead? Astha, since it's a long-term investor, I have a query for Taril on this.
So my idea here is, first of all, what happens to this company, because it is, power equipment story. We should believe on the growth of such company. But the problem is with the kind of valuation they are quoting right now. And on the back of that, if the numbers are not justifying to that extent, because in the Q1 FY27 also we have seen the improvement in the margins, profitability, etc. But the kind of improvement which should justify the value was not there. So my idea here is order inflow is very strong. They have got a unexecuted order book of around more than 6,000 crore, if I'm not wrong with my memory. So I mean, all these figures are indicating to a very strong growth story. But only problem is with the valuation, because valuations are at a stretched level. So idea here is that maybe it can correct more on the back of the valuation. So just hold this counter or average it at the lower price.
That's pretty interesting. Another query coming in from K. John Kottayam, and he has asked for how is Quality Walls. Can he buy 2,000 shares right now? He hasn't given his period of horizon. I'm assuming that this is a trading bait because already the stock is up 14%. Jatin, good time to enter this stock or stay away?
Yeah, see, at the 14% high, if the stock is trading, then the risk reward is not favorable. Overall, the trend is positive. However, one can, look to enter the stock around 39.50 or around 40 levels where we have the breakout point. So today it gave a breakout and we can expect a retest of that breakout. So that retest of the breakout will give an opportunity to enter. The level is 39.50 or 40 rupees. So buy on dips, overall trend is positive. Upside is placed at 50 rupees.
Okay, buy on dip coming in for Quality Walls as well, sorry. But another query is from Ashwini from Chennai and ask is the short-term target of Agarwal's Healthcare Limited. We would get this stock on screen. Stock is, around 500 rupees. It's trading. Jatin, any short-term targets, be it like a week target or a month target? What's coming on the screen?
Agarwal I, right?
Right, Agarwal I.
Yeah,
Agarwal Health, sorry. Agarwal Healthcare I'm talking about. It's in NSE, yeah. Dr. Agarwal's Health, yeah.
Yeah, so I think the stock has formed a double top at the 560 level and thereafter it has been correcting. So the crucial support is coming in at 475, 470 levels. So I think there is still more downside to this stock and thereafter the stock can, resume its up move. So as of now, continue to hold with a trailing stop loss at 470.
All right, that's the important levels to watch out for Dr. Agarwal's Health. But let's get into the speed mode. Rapid fire round is there. Jatin and Astha, we require faster answers and we'll getting as much queries as possible for our viewers. The first one is, of course, Nishant coming from Gurgaon. He's looking out for a stock in the water supply and management sector and he wants to allocate 5 to 8% of a lump sum position of his portfolio. Astha, your view on it? Any good pick in the water supply and management sector?
Of course, Vatek Vabag is one of them. Then I think there are a few good companies, Enviro Infra, if I'm not wrong, it is also one of the good company in that space. So, but I would like to go with Vatek Vabag.
Okay, now we have Bablu Thakur from Indore. He's bought UPL at 575, 1480 shares. Should he hold or sell? Jatin?
Continue to hold with a trailing stop loss at 550, upside target 600.
Okay, Aniket from Pune has come up with two semiconductor stocks. Moship, he has roughly 50 units at 181, and Spell is also there, which is at 149. Can he hold both Moship and Spell, both of these counters? Astha?
Yes, definitely. Our hold is recommended for both these counters.
All right, Lavanya from Elluri also comes with a query holding 300 shares of Paras Defense at 1528. What kind of short-term targets we can get, Jatin, for Paras Defense?
Paras Defense can rally up to 1625. Support is placed at 1380.
Right, interesting query coming in for Dalmia Bharat also. 1718 is the buying price. Should there be a sell or a hold? Astha, your view on it, Dalmia Bharat.
Hold with a price target of 1950.
Okay, 1950 is the target coming in. A good time to buy Apollo Hospitals. Shrujana from Chennai is asking, what's there on the charts, Jatin, for Apollo Hospitals?
I'm expecting weakness towards 8,200, 8,000 levels. So exit or don't buy at current levels.
Now we have Shaunak Kulkarni from Mumbai. Now they have bought the Tata Motors PV at 351. 1450 shares is there. Should we hold or sell? Jatin?
Yeah, the trend is negative. Sell would be the recommendation. On the downside, 306 is the target area.
Astha, long-term query coming in for Dynacon System Solutions. 50 shares are bought at 1195 rupees. Good time to hold or average out. This is for long-term investing. Astha, Dynacon System Solutions.
Just hold with a price target of 1250.
Okay, just hold with a price target of 1250. Interesting name coming, Lohia Corp. First quarter numbers are very strong. That reaction we are seeing also on the screen. But on the technicals, Jatin, what does Lohia Corp suggest?
I think it's a recent listing. We have very little data to analyze. So 526 is the support area and the immediate resistance is 585.
A little bit of profit booking coming in the counter. Another interesting ask is from Raghunathan from Bengaluru. 3 companies, WeWork, Office, SmartWorks. Out of these 3, which should be there for long-term investment? Astha?
I think for the long-term, Office is looking good because the kind of news flow which is getting into this counter is making it more attractive.
Okay, that's pretty interesting. Another viewer, 25,000 shares of IRB for short-term. Of course, Jatin, what is it looking in the charts for IRB Infra?
The trend is still negative. On the downside, you are expecting a dip towards 16 rupees. So exit would be the suggestion.
Okay, exit coming in from this counter IRB Infra. But Pakshal Jain from Jodhpur has come out with its 2 picks, Trent versus Vishal Megamart. That's what I'm seeing for long term. Either of these two, Astha, which one will be better for Pakshal?
Valuation wise, Vishal Megamart is more better.
Okay, so that's the end of the rapid fire round, and we had an interesting set of companies being discussed. Thanks a lot for that, Jatin and Astha. We had roughly 90 queries answered today in our Ask Profit editions, which also includes the afternoon edition. Thank you very much, both of you, for joining in and giving your technical views as well as fundamental views. And we'll just do a short market check also on how things are panning out. And then we'll, of course, give you the entire picture of how the markets are moving. Markets are relatively stable right now. The Nifty is up almost 150 points. Nifty Bank also showing that good strength going ahead. Apart from this, if you look at it, there is a good momentum in the markets. So now we are short of time. That's all, folks, for us at this channel, at this show. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
New rules of engagement. Ambitions crossing borders. voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets.
Hello and welcome to India Market Close on NDTV Profit from the NDTV Profit Suzlon studio with me, Heeral Dadia, and Mahima Vachajani as always. So I'm the new one today. But clearly, in terms of markets, a very interesting day of trade after that lackluster moves, Mahima, that we've seen in the last couple of days. The question is, I wouldn't really call this very strong momentum, but there is that little positivity with 0.7% higher. We're trying to go towards that 24,250 mark. And if you see in terms of Bank Nifty as well, gains pretty much in line with what you're seeing on Nifty 50.
Yeah, absolutely. And the psychological mark that we were talking about yesterday has not been breached, thankfully.
Correct.
So 24,200 levels above is what we're trading at. The broad end of spectrum is also looking very positive. If you take a look at the mid cap 150, it's up, mirroring the benchmarks, almost up by about 0.5 odd percent. The small cap 250 doing even better because it's up by about 0.8 odd percent. Even the advanced decline ratio is going to be an interesting one to watch out for.
Yeah, if you can just get the intraday, because
intraday, yes,
your advances are kind of double your declines and you can see what's happening. But if you go to see from opening, that gap has slightly narrowed now, right? So that's telling you where the breadth is actually moving towards. But 1800 versus 983 on the declines. Let's just look at the heat map on Nifty 50 and see where is the action today. From where we started off, again, more of green as we're seeing. You just have around 10 counters on Nifty 50 which are trading in the negative. And what's down is Hindalco. And this is for obvious reasons, where it's the Novelis pressure which is coming in on the back of the trade deal between US and Canada. You have Apollo Hospitals, Tata Consumers, Tata Steel, Nestle, a lot of your Tata Group companies. So Tata Motors PB, Tata Steel and Tata Consumer. Three of them are under pressure. Few of your consumption names are under pressure. Indigo is down 0.5%, not that much. But this is because crude has spiked to $92, $93 per barrel. Apart from that, what is interesting, Mahima, is eternal to me right now.
Yeah.
2.5% up move and few of your financials.
Yeah, and Eternal has continuously climbed in the last so many days, right? Since its earnings has come out, it's been on a constant high, and it's making that higher high pattern in the charts. Also,
in fact, let's just get a intraday, or let's just get a 1 month or even a 5-day chart of Eternal to see exactly what Mahima is talking about. If we can just get Eternal there, and you'll see, look at that, absolutely. Those higher highs and a 14% up move in the last one month, and that's a strong momentum with regards to Eternal. Can we also have a Swiggy 1 month chart, because that will tell you what's really happening between a Eternal and a Swiggy right now?
It's the other way around.
There you go, 3.5-4%. So you know where the moat is between a Eternal and Swiggy. But let's get back to your Nifty 50 contributors, and then we'll look at the sectoral heat map as well very quickly. In terms of contributors, it's interesting to see a HDFC contribute to the positive today. Bharti Airtel, Eternal is contributing, and ICICI Bank. So it's your private banking space which is doing the trick today. Hindalco, Apollo Hospitals, the same names, but it's just 9 points there versus 175 points. So HDFC, Bharti Airtel and ICICI Bank, the three major winners there. Let's look at sectors, Mahima.
Yeah, and the breadth, exactly what he was pointing out for the Nifty 50 is very strong. Just the defense in red and the entire screen is in the green. It's good to see that for sure. But you have, of course, Realty and Media topping that chart. Realty is back in action today. IT for the second day in a row is doing well after seeing the 2 days of profit taking coming in. But something like an oil and gas is almost flat. PSU banks is not contributing much towards that gains coming in on the banks. Private banks are doing very well as compared to that. There you go, topping that chart almost up about 1%. But FMCG, there are counters that are doing well, there are counters which are under pressure, but largely not from the Nifty 50 that are contributing to that gains coming in. Overall, that's how the sectoral heat map looks like.
I think the broad idea today, what we are seeing is that at lower levels, you're seeing that buying interest which is coming back in the markets. And the moment you see that higher high, there will be some bit of selling pressure which builds up on the top, and that's the strategy that investors are watching out for. And again, on the derivative side, on the back of cash, you are seeing volumes on the prop trade books also which are dwindling. In fact, let's get in our guest. We have Rajesh Palvia as well as Pankaj Pandey, both of them joining us. Pankaj, welcome to the show. Always a pleasure to speak to you. You're seeing some positivity in terms of markets today after those lackluster moves that we've seen in the last couple of trading sessions. Now, would you say any of these bounces should be used as an opportunity to book profits in any of the names that you would have bought probably at the lows, or even this should be used as an opportunity to actually start accumulating now?
Yeah, hi, good afternoon. Thanks for having me. See, overall, when we sort of look at market Nifty levels, again sort of stuck in a range, so no major directional moves. And I think till the time crude does not settle down lower, we would continue to sort of oscillate in a particular range. When you sort of look at Nifty Next 50 or the mid cap and small cap, and that is where the excitement lies, and that is where we have seen a better set of earnings also. And I think a good part also is that when you look at the FPI flows, so first 15 days of this month, the FPI flows have been positive. And very interestingly, it is coming into sectors like, say, for example, financial services. We have consumer services, which is your new age companies. We are seeing inflows. So I think inflow-wise, things are also positive. Now, our sense is that overall, since mid-cap and small caps have made a new high, so individual stock level call can be taken. But structurally, we would want to believe that things should incrementally improve from here on. I think after 6 quarters, we have seen one of the best earning seasons. Probably second quarter or next quarter, we might see milder pressure on the margin side. But overall sense is that the earning trajectory is expected to be in double digits. So this is not a time to sort of exit the markets, and I think wherever opportunities are there, we have been sort of suggesting people to sort of accumulate or buy.
Okay, accumulate or buy at this point of time is the view coming in from Pankaj. But Rajesh, a very good afternoon to you as well. We were talking about how 12 days straight Nifty was kind of forming lower highs, and that's been broken today. So that's a good sign for sure. And do you think from here on this upward movement could continue? And if yes, what are the targets that you're watching out for Nifty 50?
Yeah, hi, good afternoon. So, yeah, after corrective move of last 10, 12 days, there is a sign of recovery from the market, and again Nifty able to move beyond again 50-day moving average. Though we have broken 50-day moving average in the previous day, but again we have again regained above that level. Looking at the data setup also, most of the put writing activity has been visible around 24,000, 24,100 strike in the previous day session also. So I think towards the end of this August series, we might see some more pullback action to play out, though 24,350 to 400 is likely to act as a stiff resistance for this pullback, as major call writers are still confident around those strikes. So major short covering will play out about 24,400 only, and I think for this expiry, I think it looks like little difficult to cross 24,400 until any major positive news not played out in next couple of days ahead of expiry. So range bound activity for next couple of days towards 24,100 on the downside, 24,400 would be on the higher side range. But Bank Nifty has taken the support from the important level of 57,100, 57,000 put base concentration, and some recovery is taking place in banking stocks as well as Bank Nifty. And structure is indicating that maybe we could see some more continuity of this pullback in Bank Nifty. 57,800 to 58,000 would be the next level for Bank Nifty if it continues to trade above 57,300. So here we may see some recovery, and some of the pockets like automobile, pharma, new age company, and these all companies are showing a sign of strength. So here we may see more continuity of uptrend.
Okay, so Bank Nifty is where the moat is. Rajesh, good afternoon. Hiral on this side. What would your top picks then be? Does any of the financial name fit into your bill?
Yeah, so definitely from financial at this juncture, we are focusing more on the capital market theme. But yes, from the banking space, if someone wants to take some bet on the banking space, one can look at RBL Bank as well as Kotak Bank. These two banks are looking promising for near-term trading perspective. For RBL Bank, we believe that this stock has potential to extend again towards 405 to 410. So here one can buy and accumulate as stock is comfortably holding it to a 20-day moving average support area. So RBL Bank could be outperforming stock for near-term trade. On the downside, 384 needs to keep as a stop loss. And another sector, as I mentioned about automobile. So I think here also there are opportunity in automobile. Hyundai Motor, Eicher Motor. These two stocks are looking promising. We believe Eicher Motor has potential to extend again towards 8,300, 8,400. So here also one can deploy some long trade with stop loss of 7,950. And for Hyundai Motor also one can look to buy. We may see more upside in this counter, and 2,400 would be the positional target. On the downside, 2,160 needs to keep as a stop loss.
Okay, all right. So that's two picks coming in from the auto space. Eicher and Hyundai Motors are both trading, by the way, at the day's high point. But it's time for our stock of the day section, and today the stock that we've chosen is Strides Pharma. Now, if we can try to pull up the stock, it's of course come off from the day's high point, but it's been surging in trade, and this is after it receiving the closure of the US FDA inspection that took place in its Bengaluru facility, with regulator classifying the inspection as voluntary action indicated. And Varsha, who tracks this very closely, is joining us to give us more perspective on what has happened and what's the development here. Varsha?
Well, it's a good news for Strides Pharma because the Bangalore unit receives US FDA EIR, that is Establishment Inspection Report. Now, Strides, so they earlier, if you see in inspection, they US FDA had issued 5 observations under Form 483, post which Strides submitted corrective action response within timelines, and hence post that US FDA classified the inspection as voluntary action indicated, that is VAI, which is a positive one, and hence inspection has been closed and the key overhang has been removed. Now this is the news. Now why this is important? Because the Bengaluru plant, if you see, is company's largest manufacturing facility, number one, and also plant supplies medicines to regulated and non-regulated markets. Even they manufacture tablets, capsules and oral liquids, and hence if you see, this supports sales across more than 100 countries. But Strides' story is beyond US FDA clearance. The bigger story over here is, number one, FY28 aspiration is intact. They've reiterated FY28 North America target, which is at $375 million. And hence, so they are continuing to see path from $285 to $375 million when it comes to North America market. Also, H2 FY27 is expected to be better than H1. That means Q2, you might see some kind of pressure, which we saw in Q1 also, but growth is expected to come from approvals when it comes to H2 FY27. Talking about 100 plus product opportunity, so more than 100 products are yet to be commercialized, and hence Strike is actually banking on them. Large launch pipeline remains available with the company. They are not chasing market share at any cost. Talking about controlled substance, which is a key growth trigger for this company. So controlled substance are drug which is strictly regulated by government, and hence they contribute only 5% today, but company expects this business to scale meaningfully and already has 20 months of sales history when it comes to this product. Lastly, ex-US, which is everybody is actually banking on US, but Stride's story is beyond US market. So which grew almost 17%, is growing faster than company's average and also contributing to margin expansion. So controlled substance and beyond US market are some of, and 100 plus products are some of the key triggers for Strides.
Okay, Varsha, thank you so much for putting that into perspective. Pankaj, you heard Varsha say the triggers for growth for this company going forward. Would Strides Pharma be, one of your picks in the pharma space? And if not, what is it that you're liking in, pharma space specifically?
So, Mahima, Strides Pharma we don't cover, but what we like, say, in smaller pharma companies is one is Sakar Healthcare. I think this company has invested about 200 crores in the last few months, and the oncology business is something which is expected to sort of do very well for this company. I think currently sales is about 100 odd crores, and we would expect it to sort of jump up to somewhere about 300 odd crores in the next few years. So this looks good to us because they are one of the exporters for both APIs and formulation. So from our export side, this small cap company looks attractive to us. From a domestic perspective, what we like is RPG Life Sciences. RPG Life Sciences largely because 70% of the revenues is coming from the domestic side, plus overall sense is that they can continue to sort of deliver high teens given the fact that the domestic pharma itself growth has improved to about 14 odd %. And they have a higher economic share as well. In addition to that, I think they have onboarded a PE investor for their API business. So that is now valued at about 680 odd crores. So API business also is taking good, interesting shape. I think overall we have a target price of about 3,300 3,340 on the stock.
Okay, so interesting names coming in there. In fact, very quickly, Rajesh, from the pharma pack, anything that you like, because a couple of counters which have been on an uptrend as well, there is a little bit of momentum that's picking up there.
Yeah, I think Glenmark Pharma is looking quite promising. The post-earning stock has absorbed all the supply pressure and now comfortably trading above 2300 mark. I think if it continues to trade above these level, maybe we could see another 4 to 5% kind of up move in this continuation of this up move. So 2400 to 2420 we are projecting target for Glenmark going forward. On the downside, 2280 needs to keep as a stop loss. And another stock where we are holding bullish view, that is Divi's Lab stock, has already broken out. Long-term charts are already shown a breakout. Looking at across all time frame, we do believe that stock may exhibit furthermore upside. Possible upside towards 8800 to 8900 we may see in this counter towards in a couple of weeks. So one can buy an equivalent Divi's Lab also. On the downside,
83.50 needs to keep as a stop loss.
Okay, so that's with regards to Divi's and Glenmark. In fact, Glenmark, if I'm not mistaken, did get a USFDA approval as well for a nasal spray today, and that's since then the stock has been up and about in trade. But moving on, it's that time. It's almost 2:45 where you get Somit Sarkar, who joins in with all the chatter from the dealing room. Somit, good afternoon. What's on the list today? Because there is some momentum in the markets as well. Lots buzzing.
Good afternoon, Hiral. A lot of stocks that have been buzzing in dealing room. The first one is on Unimake. Now, dealers are indicating that there could be a potential fundraise via QIP that could open soon for this counter. For CMP DI, the dealers are indicating that the selling pressure is largely over in this counter. A large DI was a seller here, and that is likely to get over soon. And dealers expect the stock to bounce from current levels. For KFinTech, a block deal took place today, and dealers are indicating that among buyers, Invesco and Mirai Mutual Fund were among the anchor buyers in this block deal, and few positional quantities have also been bought by hedge funds is what dealing rooms are indicating. For Zydus Life, there are buy flows on the FI desk. Delivery volumes are expected to be on the higher side. And when it comes to DCB Bank, that stock is up nearly 4% in trade. The buzz on the street is that some PE investor, private equity investor, might look to pick up stake in DCB Bank. So keep an eye out for this counter. And lastly, when it comes to Amrutanjan, block deal of close to around 45 to 50 odd crore took place in market today. Dealers indicate that this was largely a change of hands among mutual funds. DSP was most likely the seller here, and ICICI Prudential was the buyer of this chunk. So keep an eye. The bulk and block deal data would be important to track today.
Okay, all right. Somit, thank you so much for getting us those details. Interesting names, propping up in that list for sure. But, let's also try to focus on, because it's been an IPO heavy week, and we've seen a slew of IPOs come in, and a few of them to come very soon as well. And, Tencent's Instruments is the one that we're putting spotlight on. Just to give viewers a perspective, it's open today, and the price band is set between 285 to 300, and the total size of this issue is around 650 odd crore, of which 95 crore is the fresh issue. But let's try to get in the management to get some more perspective as to what the plans are, going ahead, and what sort of fund deployment is going to be made via this IPO. We're joined by Vinay Rathi, who's the managing director at Tencent Instrument, and we're also joined by Aryan Rathi, who's the lead global sales at Tencent Instruments, joining us now. Welcome to both of you, gentlemen, and very good afternoon to the both of you. Thank you so much for taking the time. I think my first question to you is going to be with regards to how your revenue growth has fared for FY26, because it's moderated from where it was in FY27 at 37%, but the growth has come down to around 17%. What were the key reasons behind this one? And going forward, what is the kind of CAGR growth that that one can expect in terms of where your top line goes? Vinay, I think I'd like you to answer this question.
Sure. Thanks. So we have had a amalgamation and some acquisition in that year. So that is why the growth rate is higher in the last year. And the typical growth rate of the company would be in the line of whatever we have had in FY26. So that would be kind of continuing further. So that is what we see. The company is in the business of making temperature sensors, electrical heaters, and specialized cables going to all kind of industries. Also, we are exporting to 80 countries. Also having factories outside India. There are 5 factories outside India. So we see that a good possibility in these kind of specialized instruments and electrical heating equipment what we manufacture. So we see a good prospects worldwide.
Okay. Vinay, good afternoon. This is Hiral on this side. Now, I'm just looking at your revenues, very strong growth, and as you mentioned, the reasons as well. If you have to look at FY27, what percentage of your revenues is backed by executable orders or contracts? And 2, how resilient is that order pipeline if there has to be some bit of a slowdown coming in on the industrial capex side?
So the thing is, our revenues are dependent about 70% on the capex cycle, and the rest is on the replacement demand for the sensors or the electric heaters that we do. And we are working with all kind of industries, be it cement, steel, power, petrochemical, glass, nuclear, space. So we are not dependent on one capex cycle. So the company has seen multiple cycles in different industries and has grown with a similar kind of growth rate in past multiple years. So we see that we are not dependent on a particular industry or a particular capex cycle. So we think that it's a very diversified product and a market portfolio what we have. Also the kind of business we cater to. So we don't see a problem because of any capex cycle or anything. Yes.
Okay, so that's on the top line. What about your profitability? Because that is also impressive. Are these margins sustainable or they're just benefiting from a strong industrial cycle?
So a major differentiator is the R&D for us. A lot of products that we, about 80 people working in R&D, 11 patents granted to us, a lot of products that we do. So worldwide, there are very few competitors. And we would be the only manufacturer for some of the products in India. So that is a differentiator that specialized products are offering us higher than regular margins from any engineering industry.
Aryan, a quick question to you as well. Your exports have been growing rapidly. Give us more sense as to what is the ratio like right now in terms of domestic sales versus what you export, and what is going to be the next leg of growth looking like when it comes to your exports, and what geographies are you going to be targeting?
For sure. So we 30% of our revenue comes from international geographies. And that revenue, part of the revenue has been growing faster than what we've been growing in India. And we expect that growth to continue because we are setting up, offices and plants in newer geographies like South Korea, Poland, Mexico. So they'll be major growth drivers for us. And I mean the existing geographies, especially Middle East and Europe, to also be in line. So we are growing on all fronts and capturing all kinds of cycles across these economies.
What's the customer concentration risk that you're sitting on? I mean, what quantum of revenue is coming from your top 10 customers? If you could help us understand on that front.
Right. So about the top 10 customers only contribute about 18% of our revenues. So we are incredibly diversified there. We have about 3,800 plus customers across varied geographies and varied industries. We are not dependent on a single customer or a single set of customers. And these customers, are dependent more on the kind of projects they have. And of course, they come back for their MRO requirements always.
Vinay, just one last question from my end, because for you, your major raw material is both copper and nickel, and we've seen as to how prices for both of these have shot up quite a bit. So wanted a sense in terms of how much of this price increase in terms of raw material or inflation that you see can be transferred for you, and how much of it do you retain for yourself and that hits your margins?
Yes, so our items are going to project and the MRO business as we discussed, but these are like short cycle orders and everything is make to order. So we don't have a very large and a long pipeline of orders with the customers, and these products are coming in the fag end of any project. So typical order book is like maybe 4.5 months for us. So whatever is the cost of the commodity at that point of time, that is priced in for the customer. And for some of the orders, we also have got a price variation clause, which can be passed on to the customer in case of any price increase. So we are not really affected by the commodity price increase to a large extent. Maybe there would be a smaller bit, but to a large extent, we are quite insulated from that.
Okay. A quick question over here. One, with regards to where the valuations are standing in terms of the money that you're looking to raise, what earnings growth, according to you, you will have to deliver over the next 3 years to actually justify the current IPO valuations, number one. And two, in terms of even if you have to look at the working capital cycle, that is also stretched at 210 days. Do you see that narrowing? Vinay?
Right. So on the growth side, we believe that we are, fairly valued there, and our growth should continue across the 3 verticals. We have many, projects that are going on that should deliver this kind of growth. And on the, let's say, working capital side, what you see in the book is kind of an aberration. At the end of FY26, we acquired some companies and their balance sheets got amalgamated, but their incomes didn't. That is why the working capital in theory has shot up, but it should normalize to the historical levels in FY27.
All right. Okay. Vinay and Aryan, thank you so much, for taking out the time and all the very best. We look forward to speaking to you once you get listed.
Thank you. Thank you.
All right. So that's, of course, the new IPO that's open today. Pankaj, just the way last 2 weeks have been in terms of primary markets, right? It's been a very strong action, and one of the reasons as to why we were seeing, the secondary markets being muted was because a lot of money was flowing in the primary markets, right? From all of these IPOs that have come in, anything in particular that you have liked, where valuations have looked attractive, and you think that could be a great multi-bagger in the next coming years?
So we have discovered one, but incidentally, I think the IPO is going to open next week, so I can't really sort of disclose the names. But in general, overall for IPOs, we typically prefer to sort of a cooling period of say 1.5 to 2 years, because typically whenever the IPO comes, you are seeing one of the best numbers. So we would prefer to sort of when things sort of cool off, and that is when we sort of prefer to sort of look at a stock from a fundamental perspective.
Okay, all right. So that's the view coming on a lot of these IPOs. But Rajesh, Balrampur is one of those stocks that's done very well in trade today. I mean, yesterday you saw a lot of sugar companies doing very well when it did nothing per se. It was muted. But today it's seeing a gain of almost 18, 19 odd percent in trade. And when the earnings came for this one, it almost tanked by about 15 odd percent. So it's recovered quite a bit from there as well. What do you make of Balrampur on the charts? Do you think this momentum could continue from here on as well?
Yeah, definitely. So very strong breakout took place in Balrampur Chini. Even most of the sugar companies are also, attracting buying interest. Even if you look at Uttam Sugar has also, managed to move around 10% in intraday perspective also. But looking at the Balrampur Chini, yes, we do believe the kind of breakout which we are observing on daily, monthly, weekly time frame, we believe that, if it's able to sustain above 755, 760 mark, I think next up move towards 820 we could see in the near term for Balrampur Chini. So one can hold on the position, trail stop loss at 755.
Okay, so that's with regards to where the sugar pack goes. In fact, Balrampur Chini at the day's high is 18 to 19% is the kind of surge coming in there. But moving on, let's pull up a HEG on the screens, because the NCLT node has come in when it comes to the demerger. Not doing much in trade today, but let's just pull up a 1 month or even a YTD chart of HEG, and you will see the kind of gains that have come in for all the graphite players. There you go. I mean, that surge from July lows to now has been spectacular. Though in this year, it's been a topsy-turvy ride. I mean, 13-14% is the kind of surge coming in there. And this clears the way for two distinct businesses. We have with us Riju Jhunjhunwala, Vice Chairman of HEG and Chairman and Managing NMD and CEO at RSWM as well. Welcome to the show, Riju. Always a pleasure to speak to you. My first question coming to you is, now that the NCLT node that has come in, what are the next steps and what are the kind of timelines that you're looking at with regards to where the demerger goes?
So thank you. So the NCLT node has come, and in the next 1 or 2 days, we'll receive the formal written order. I think we should have our board meeting somewhere around, the last week of this month, and somewhere around the first week of September, we should see the record date setting for the new company. And then for HEG, for the graphite company to be relisted, it will take another 45 days because you have to go through the fresh filing with NSE, etc.
Okay. Riju, hi. Mahima also joining this side. I want to understand the rationale behind this one as to what kind of value creation opportunity does this create for you, separating the two companies, and then wanted more sense in terms of why have you chosen this as a time to separate these two? What is it that you're seeing that both of these companies can separately do?
So, HEG graphite is, I mean, as you know, we are in the graphite electrode business, which is used in the electric arc steel making. And that business is totally debt free. And we are the single largest plant in the world, 100,000 tons and growing to 115,000 tons. And in the new company, I mean, under HEG, what we were doing, what is putting up India's first plant for supply chain for the lithium-ion battery plants parts. This was the graphite anode space. So this was being done under HEG. HEG also held 40% in our group's green power initiative, which is 300 megawatts of hydropower. So to value the unlock value that you're talking about is basically to bring a sharper focus of one company being totally on the graphite electrode space and playing there, and the second company which was in the business of advanced materials, so to say. I mean, absolutely cutting edge or to advanced materials led by R&D, etc. And towards that, we are putting up the first 20,000 ton anode plant of graphite powder in Madhya Pradesh. That plant is around a 2,200 crore capex and would be in production by April next year. Apart from that, we are also trying to do things with other complex materials like graphene, etc., where we are seeing a lot of success of our last 2 years R&D. And also, this new company will have 100% stake in the power asset, which is a 300 megawatt power hydropower, which gives us a EBITDA of around 350 crores every year. So two separate companies, one with complete focus on advanced materials and green power, and HEG as a company with complete focus on graphite electrode space.
Okay, Riju, that's interesting. Let me come in from an investor perspective now, because I'm sure any investor would actually want to know what is it that they get as benefits on the back of the demerger. So basically, one, how will the capital allocation work independently between the two companies, and which businesses will require greater investments over the next 3 to 5 years? And two, from a tangible benefit perspective, what should a shareholder expect from this restructuring in the next 2 to 3 years that they wouldn't have received in the current structure without demerging?
So in terms of capital allocation, I mean, HEG is a debt-free company, and as part of the demerger, HEG has the new company will also have 800 crores of cash, plus the cash available with the hydroelectric power plant, so around 1,500 crores of equity for the new company to follow its growth path. And in terms of, what is it in it for the investors? Every investor is going to receive 1:1 kind of shares for HEG and for HEG Advanced Materials. And then the two companies follow their own growth paths. So graphite electrode, as you know, I mean, it's a cyclical business, a highly profitable business, but very cyclical. And we are seeing now, the last 2 years have been on a kind of a down cycle, but now with the increase in electric arc furnaces, etc., we think that we are at the bottom of that cycle. So whoever wants to take part in the graphite electrode space is free to focus on that, and whoever wants to take part in India's energy transition, the lithium-ion battery supply chain space, there we are giving up an option of participating through HEG Advanced Materials, which will be one of the first companies of its kind in India to start physical production of lithium-ion battery-related items.
Riju, in terms of capacity additions for both of these businesses, what is the outlook looking like? Because, especially for the graphite business, we've seen in the recent past that there has been a significant amount of capacity addition that China has also been doing. So when you put your business versus where the global presence is already there, what kind of capacity additions are you looking at for the graphite business as well as for the green tech business also? What is that number going to look like? And then what your return ratios will also indicate post that additions?
So in graphite electrode, you see that there are only 5 companies in the world excluding China, and two of them being in India and the balance 3 being in the western part of the world. And China, of course, while you can't write off China in anything, but China is present in the lower quality graphite electrodes, which are used in the smaller size electric arc furnaces. So the UHP electrodes, what we call the ultra high power electrodes, they are produced more by the Indian companies and the Western companies. So over there, we are not seeing much of a competition from China. In fact, we are seeing good price rises coming over there in the last 2 or 3 months, and the next 1 or 2 years so should see some good cycle there. In the anode space, it is completely the opposite. I mean, China produces 95% of the world's anode material for lithium-ion battery cell, and our plant in India will be the first one of its kind, which is why we are seeing a lot of interest from a lot of global companies, the tier 1 OEMs, the different cell manufacturers, because everyone in the US and Europe, they want one more source apart from China. They don't want to be 100% dependent on China for their buying of such a critical material. So over there, a good traction we are seeing there already before the plant is commissioned. And by April, this plant would be commissioned, and then we'll be looking at how to, kind of grow that particular business quite differently.
Got it. So I think lots to watch out for. In fact, the stock trying to make its way higher today, Riju, as we speak. But thank you so much for joining in. It's always a pleasure to speak to you. A good recovery coming in from the day's lowest levels in terms of where HEG goes. Let's also pull up a Graphite India, because usually you see both of these counters moving pretty much in tandem. Though today that stock is absolutely flat. If you can just have a 1 month chart of both HEG and Graphite India to see if there is any comparison that you can make, or where is the moat and where is the interest, that will clearly be shown. If you can just have, there you go, 1 month, almost a 20% up move on a HEG. Let's pull up a Graphite India. There you go, 12 to 13%. So you still have a Graphite India that needs to play that catch-up rally with regards to both the counters. But we'll quickly slip into a short break. On the other side, we'll get you the top buy today and sell tomorrow picks as well, only on NDTV Profit from the NDTV Profit studio with Mahima and myself.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Three decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Welcome back. You're watching India Market Close here at NDTV Profit, and on this side we're joined by Amodev Singh, Senior Vice President Research at Angel One, and Vinit Borinchkar, Head of Research at Ventura Securities, joining us now. Good afternoon to both of you, gentlemen. Generally we start with the technical guest first, but Vinit, let me come to you first today, because I was looking at this data point where we are seeing that August is on track to see the highest net FPI inflows, and this is after a really long time, since September 2024, that we would be probably seeing this. When you're seeing this inflow coming in from FPIs, what pockets do you think are showing strength right now, and where you would put your investment bet in right now?
See, right now I think the numbers were very strong for Q1, and in contrast to that, Asia is not doing well. So obviously we are getting a lot of the trickle supply coming in from investments. And I think that the FMCG segment is going to be one of the biggest outperformers, because for 2 consecutive years we are hearing very positive commentary, and a lot of things are stabilized out there. Pricing power is returning, and we are seeing a lot of distribution outreach from all the players to as they are expanding their networks pan India, going into tier 2 and tier 3. So I think a lot of growth is going to come out there from this segment, and so we remain very, very strong buyers in this segment.
So, in fact, that sector is at the day's highest levels as we speak, almost 0.8% higher. The question is, are there any buy ideas that are coming in? Let's ask Amar on that one. Amar, we're talking about the FMCG pack. Anything on the charts that you like where you're seeing a further momentum?